Quindi
有少少，差唔多。
好唔 OK？
OK。
好，唔該晒。
啊，对你是不是在那个日本？
好尷尬。
咁呢個係各方嘅問題。
我哋自己
咁啊得，因為我係負責要帶呢個圖畫嘅。 佢係咁同我講嘅，就打電話溝通嘅時候，佢話以後嘅計劃，本身又要嗰啲數據頭嗰啲乜嘢都買嘅。
係啊，啱開始係
咦，我哋冇喎 reserve 喎。喂，hello，你好啊。
快啲啦，側邊啦，我哋好快喎。啊？唔係，因為我哋傾咗先。water，
等我幫你搞。
那边斜的吧？有这那边
我都識講，不過好快啊，打起咗。
你直播啊？我哋再多少少。可以同兩位影相，肯定係我榮幸啦。係咩？係咩？我睇你都成日都見到你喎。
而家我喺個香港嘅星高星啦，之後我哋嘅新加坡嘅星高星啦，之後後邊我哋喺香港嗰四九度牌，
係咩？
要地
Ladies and gentlemen, please find your way to your seats. We have 5 minutes before we begin this monumental event of the Asia Financial Summit. Welcome everyone.
出嚟啦，好少出嚟。
你點解我成日都飛過去？
依家我喺個新咧，亦都係揀個 PC 嘅時間。係啊，我自己呢啲方之前都有玩過，我唔知係唔呢個依家。
夠唔車嚟？我唔係先得咁嘅車啦。
在海河一后山啊，没有拿出啊，然后加上一起走的很贵，办公室就在上海现场管好，不过8月要8月住了1年了嘛，都没了嘛。没问题。吃东西了没有？像我这个原来泰达的那个创作
是吧？哦，几点看？
大家在我哋呢邊啊。
坐在这里啊。
好，那这边来一个啊，微笑。
我说所以等一下给你讲。
来看我这边来一下，大家一起比个赞好不好？来3、2、1 ，OK， OK 吗 ？OK， 好。
Thanks for coming over. Yeah. Well, we didn't skip my panel. The other speakers are one of the key features.
我理你自己嘅客人嚟噶嘛。
在地行啊，在地行，睇下佢發咗個動畫。
Ladies and gentlemen, please find your way to your seats. We will begin officially in around 5 minutes. Again, please find your way to your seats and welcome to the Asia Investor Summit.
各位来宾，欢迎大家来到今天的活動。我們的活動將會於5分鐘以後開始，請各位找到自己的位置，可以準備入座。各位歡迎大家光臨本次嘅活動。本次活動將會於5分鐘之後開始，請各位揾到自己嘅位置，開始準備活動。唔該。
留了个位置。还有名字啊。
也有面耶。我觉得最好就不要再超过嘉宾的桌子。是这个投过去。差不多了吧？
坐在哪？跟嘉宾我们坐一起。
好。对。哎呀，第12次。好来。
下来了。我给你介绍。本身呢，他是想讲的过来的，结果过来他来不了。主讲。来，主讲。我刚才后来的，他开始了。我在中间现在敲了13个小时。他刚从那个新加坡和泰国签了一些新加坡、泰国的，他现在在签印度。印度好啊。这是彭主席见过吗？第4届，这是第5届。对。对，传说中的彭主席。说谁呀？
没见过他，但是人家跟我说是他买的嘛，这个国泰的。他听说他是黑社会嘛，我就听到这样。现在哪有黑社会啊？不是说他传声、民声、门声啊，还有什么东北人啊，对，我听到他们形容他。看起来有点北齐哦，国泰是现在做了多少了？13个。
今天说都不想签了。
要考虑这个只有。你们还在新世界吗？
你们见过首尔？
没有呢，就是听过首尔。
这也是国泰的。
他是在青岛见的多少？
没有，在深圳哪里啊？在哪里？
不对，不在那个国贸。
之前不是在深圳的新世界吗？
对啊，你下次这是我最重要的合作伙伴，香港的洪主席，这好出名的，在资本市场那边没有不认识。
对，要你们。
我们已经投了很多项目。
对。 我们排很多家排的对象，8月份、12月、1月、2月都等着敲钟。好啊好啊。
我上次说咱们项目那个分校团不有过他呀？
啊。
对，我就是因为周月在帮忙嘛。
好啊，行。到时候找你了。Thank you，谢谢。
今天人来了吗？
真高兴，
真高兴。
当然过了很长。我刚才在想，那个是 Crystal， 你没见过他？是的，那种。
先聊两句，叫分手。
Hello, everyone. You can sit down. Thank you.
我早就听说了，你想这多少人关心你？
来，这里。
好。
Hello， 亮你一定记得。
Hello, everyone. Welcome to the inaugural Sequire Solowin Investor Conference. Please take your seats, and we're going to get started. There's a couple of housekeeping items that they wanted me to cover with you. There's translators that are on the table. Channel 1 is English, and channel 2 is Mandarin. There's also a barcode that's on your badge. So if you take a picture of the barcode, you'll be able to join the WhatsApp group and also share the live stream of the event with people that aren't here with us today. So that's on the back of your badge, if you wanted to do that. My name is Chris McLeano. I'm the CEO of Sequire, and I'm excited to be here in Hong Kong with you. This is, it's been an exciting few days in Hong Kong getting ready for the conference with Solowin. We've been in a relationship with Solowin for a while now in the United States. We throw conferences like this all over the world, and we met Solowin through a conference that we were all doing in Puerto Rico, of all places. I don't know if many of you know about Puerto Rico and the benefits of US citizens living there, but it's the only place in America that US citizens can live and not pay taxes. So lots of people move to Puerto Rico for that. I know that you know Solowin as a financial leader here in Asia, but in America, Solowin is also making the pathway for helping lots of companies in their financial needs, in helping them go public. And so it's not only here in Asia, there's a big presence that's happening for them in the United States. And we're going to hear from some of their partners today that are going to teach you all about that. And then there's, as you all know, they launched the ETF, the Bitcoin ETF, which we're very excited about. And so we're going to have some fantastic conversations today around digital assets and the different opportunities that exist around digital assets and all of the regulation that's associated with that, which is all over, obviously happening all over the world. So I'm going to take a minute to introduce Thomas, who's patiently waiting up here. So like I said, we met Solowin and Thomas around a year ago. You all know Thomas for, he has 15 years of experience in working with companies and doing financial work for those companies. He's helped companies raise almost $1 billion Hong Kong dollars, been involved in over 30 IPOs for different companies over his career. So he has a long history of working in the financial space and has been instrumental in helping take Solowin public on NASDAQ in the United States. So without further ado, please welcome Thomas. Thank you.
Thank you so much for Chris' extraordinary speech. Thank you so much. Ladies and gentlemen, good afternoon and welcome to the Solowin Sequire Asia Investor Summit for the first time. And it is my great pleasure to welcome all of you here today for this conference. And without your presence, our conference cannot be going very smooth. This summit offers an unique opportunities to share insights, gain fresh perspectives, explore emerging trends, and collectively shape the futures of the financial industry in the world. I would like to take a moment to thank you everybody to be here, and especially I'd like to thank Chris for his amazing teams to let this thing happen. Actually, that was an idea at the beginnings, but thank you, Chris and his team, for making this happen. And thank you for your support today to making this summit possible. This summit originated from the ideas of the Sequire Investor Summit in Puerto Rico. And here in Hong Kong, our aim is to bring ideas and talents from the West, meeting with the East. This is the main theme here today. And we have an exciting lineup of esteemed speakers and thought leaders for you today, who will share their perspectives on the global financial industry's dynamics. And this afternoon, you can hear from Mr. Joseph Chen, Hong Kong's Under-Secretary for Financial Services and the Treasury, and Brock Pierce, who is the chairman of the Bitcoin Foundations and the former US presidential candidate. Thank you very much for being here. And also, I would like to thank you, John Najarian. He's the co-founder of Market Rebellions. Thank you to be here. Yes. And in addition to a number of exciting panel discussions, we believe this will offer us an invaluable insights, expertise, and innovation solutions. And in attendance today is a remarkable assembly of minds from across the globe, including Singapore, Japan, Mexico, the United States, the UAE, South Korea, and Australia, as well as representatives of the Greater China regions and the Greater Bay Areas. This rich diversity of attendees is a testament to a collective recognition of the profound significance today for today's discussions, and reinforces the crucial roles of international cooperations plays in shaping the futures of finance. In many ways, Solowin's unique growth stories neatly encapsulates the opportunities and challenges that we have come together to discuss. Our successful NASDAQ listing last September reflects the growing phenomenon of Asia-based companies tapping international exchanges to amplify their growth and global reach. So, and our recent acquisitions of our US broker-dealers, Cambria Capitals, further illustrates the trend of our firms of expanding cross-border footprints to service clients worldwide and the diverse offerings. And also in Hong Kong, as virtual assets adoption surges globally, Hong Kong is emerging as an international virtual asset hub, a trend we are embracing to drive innovation and growth. Our operating subsidiary became one of the few participating dealers for Hong Kong sports virtual assets ETFs, underscoring the profound impact that cryptocurrencies are having on the increasingly interconnected global financial markets and service industries. And last, with the rich array of perspectives, annual discussions, and esteemed speakers gathered today, I'm confident that Solowin Sequire Asia Investor Summit will serve as a platform for building new partnerships and meeting new friends, sharing groundbreaking ideas, and inspire one another to reach a new heights. As we commence today's sections, I'd like to thank you all of you for your presence here. Your enthusiasm and engagements are what makes today's event possible. By coming together, we transcend borders and collectively contribute to the creations of a more inclusive, innovations, and resilient financial landscape in the world. And thank you once again for joining us today.
Thank you, Thomas. So now joining us virtually, we're going to welcome Mr. Joseph Chang, JP Undersecretary of the Financial Services and Treasury, the Government of Hong Kong, SAR.
Chris, Thomas, ladies and gentlemen, good afternoon. It is my great pleasure for me to join you at the Asia Investor Summit through virtual access. First of all, I would like to thank the both organizers for organizing this platform, allowing professionals and experts in this industry to exchange ideas on developing and shaping our financial service industry in the future. Hong Kong is Asia's leading international financial center, as we lead on various league tables in the region. We rank number 1 in Asia for issuing Asian international bonds by amount of issuance. We rank number 1 in Asia in terms of insurance density. We are also the top of cross-border wealth management center by size of the wealth booking here. With this backdrop, Hong Kong is the ideal destination for fintech companies to start up or scale up, as they offer tremendous access to potential investors, potential customers, and potential business partners. Indeed, we have a thriving ecosystem of fintech companies with around 1,000 of them in Hong Kong here. Such number has grown by 25% last year. Innovations in areas like e-payment, RegTech, InsurTech, and WealthTech are keenly pursued by the fintech sector, and many of those fintech companies have gained a foothold in the Guangdong, Hong Kong, Macau, Greater Bay Area, and the regional markets. As a leading international financial center, Hong Kong is always ready to be a pioneer. We were among the first jurisdictions globally that offered licenses to virtual banks and virtual insurers. And now we have 8 licensed virtual banks and 4 licensed virtual insurers in this city. And the government has demonstrated our commitment to embracing digital assets by issuing our own NFT 2 years ago. Back to 2 years ago, we issued a policy statement on development of virtual assets in Hong Kong, setting out our vision and policy direction. Since then, under the same activity, same risk, same rule principle, the government and our financial regulators have worked to create a supportive environment that includes timely and necessary guardrails to mitigate both actual and potential risks, aligning with international standards. The licensing regime for virtual asset exchanges commenced in June last year. We completed our public consultation on regulating stablecoins 3 months ago and introduced a stablecoin sandbox in March. Additionally, the public consultation on the regulatory regime for over-the-counter trading of virtual assets just ended last month. Our philosophy is very clear. We firmly believe that encouraging financial innovation is only possible through providing a transparent, certain, and predictable regulatory environment. As a leading international financial center, Hong Kong is also well positioned to effectively link virtual assets and traditional financial instruments. Virtual asset futures ETFs have been listed and traded on Hong Kong Stock Exchange since December 2022. And in February 2023, the Hong Kong SL government became the first government in the world that issued tokenized government bonds. Last December, the SFC HKMU joint guidance was further refined to clearly set out the latest requirements for intermediaries distributing SFC authorized investment products, including SFC authorized spot virtual assets ETFs. And last month, we welcomed the listing of Asia's first spot virtual asset ETFs in Hong Kong, adding to the diversity of products in Hong Kong's market. This also marked the first time that a virtual asset spot ETF product has been launched in the Asian market, reaffirming our leading position in the development of virtual assets in Asia. Ladies and gentlemen, at present, Hong Kong is home to more than 200 Web3 related companies from more than 20 economies across the mainland, Americas, Europe, and other parts of Asia. And many more have expressed their interest to come set up in Hong Kong in light of our transparent, certain, and predictable regulatory regimes. Looking ahead, we will continue to employ a multi-pronged approach to facilitate the robust, sustainable, and responsible development of the virtual asset industry and the fintech industry as a whole. On this note, shaping the future of our industry. I wish you all a wonderful forum and also the best of business in the future. Thank you.
Wow. It's fantastic to have the government so involved and supportive of digital assets. We have to get an office here. So we're excited now. Now you guys are in for a special treat. The next speaker is probably one of the nicest people that I know. He's just a gentleman all around, and is, one of the most knowledgeable people about the financial markets that I know as well. As he started off his career playing American football. Anybody like American football? Is that a thing here? Do you guys watch American football? No? Okay, well, we love American football in America, and John started his career off playing American football, and then he decided that he wanted to do something that was more difficult than American football, so he got into the stock market. And he started his career trading in the pits when you had to be there physically, and you had to trade with your hands, and you had to be there every single day. And he became an expert. And he was at one point had seats on the CBOE, the New York Stock Exchange, the CME, and was a leader in the space. He started a company that during the transition into the digital trading era, and started a platform that people could trade options on and could trade stocks on. They ended up selling that business to E-Trade for $750 million. So he has some experience in this space, and he parlayed that into creating a number of other platforms, and ultimately one that's led him today to Market Rebellion, which is his current platform where he teaches and helps people get educated about how to trade options, how to trade option strategies. And they've launched their own platform, stock and options trading platform, and also cryptocurrency trading platform that you can trade on. And I'm sure John will share some information about that. But please welcome John Najarian and enjoy the conversation, which I'm sure you will.
Thank you very much, everybody. Great to be here. As Chris said, I started off my career as a professional football player in America. That didn't last as long as I hoped, but that turned out to be very lucky because I was able to then start on the trading floor And options in the United States in 1981, 43 years ago, weren't what they are now. As you'll see from some of my slides that I'll share with you, when I started trading, we were trading about 400,000 option contracts a day. That was on 4 different exchanges. Today, we trade over 50 million contracts a day. So that is a much larger and obviously more interesting to everybody. And that's why, as Chris said, I created with my brother a platform called Trade Monster. Trade Monster was bought by E-Trade. I've also built high-frequency trading firms. I sold one of those to Goldman Sachs in 1998, I think. And I sold a floor trading operation to Ken Griffith of Citadel, who at that time was the largest hedge fund in the world. And so I've been around the financial markets and fintech for a long time. And now we've redone it. Our non-compete was up. And so we have once again started a brokerage firm. It's got about 24,000 clients right now. It's registered in 85 countries. So we can trade stock, options, futures, and cryptocurrency in 85 countries right now. And that's called SOGO Trade, S-O-G-O, SOGO Trade. And the other part of my business is educating, as Chris said. At Market Rebellion, we educate people on how to trade properly with less risk. And we also have subscriptions that I'll show you some examples of today, where our algorithms follow the biggest traders in the world without knowing who they are, but just by their size, we know they're the biggest. And when they trade, we trade. And we follow them, we coattail on those big trades. So with that said, I'm going to start flipping through slides, I think. Let's see. Maybe I have to hit the top button first. No? Sorry. There we go. Thank you so much. So that's a book that my brother and I have written. We've written together now 4 books on trading. This is our latest book. You can, I'm sure, get it on Amazon.com, but we give them away in the United States. I don't know if they'll ship it to you here for free, but the book is called It's Not an Option.com. It's not an option because we say to just trade stock, it's not an option to just trade stock. You need to be able to trade options because we can do so much more with options than you could just do with stock. And you get leveraged, you can control your risk when you enter the trade. There are so many great things about options, and that's why we've been doing this. And this is, like I say, I think it's our 4th book together, my 5th book, and we have sold over 440,000 books on trading in the United States. There we go. If anybody would like a copy of any of the slides that I'm giving you today, instead of you writing as fast as you possibly can, if you grab that QR code, all it will do is put an email together for you to our firm, and we'll be able to reach back out to you about whatever. If you say in the subject line, for instance, I'd like John's presentation, or I'd like to hear about how John and his team trade, manage money for people, any questions like that you have, if you click on that, you'll be able to be in direct contact with us. So it doesn't bring you to some crazy website, it just populates an email to us that if you decide to, you can request information and so forth. With that said, this is one of the most interesting things that's going on in the United States right now, other than our politics, of course, which Brock will be speaking about in just a little bit. But this is the odds of the Fed rate cut. As you can see, back here in January of this year, it was above 100%. They were absolutely positive we were going to see multiple rate cuts in the United States this year. We haven't seen any. And now, more and more members of the Fed are saying we might not see any at all this year. That would be interesting if we don't see any. rate cuts, and that was one of the reasons the markets have had a lot of volatility until the last month when we've had a big rally in the market, and a lot of that driven by the AI stocks. This is one of the members of the Fed saying that she thinks it's likely they're going to stay higher for longer. Don't disagree with her. I think we've still got, even though they like to say, the people in power like to say, well, inflation's coming down. No, it's not. It's just not going up as fast. There's a big difference between going down and not going up as fast. It's still up 3.4% year over year. That's not going down. If your money was going up 3.4%, you'd be happy about it and you wouldn't be sad, but you'd be sad if it was going down. This is just from Yahoo Finance, that the bond market is sending a strong message that basically the yield curve has been inverted for the longest time in US history. As many of you know, but I'll just say it quickly for those of you not familiar, the yield curve is, of course, short term. They usually measure that in the 2-year bond. It is higher than the 10-year bond and the 30-year bond. Well, when that happens, it's almost always led to a recession. And we've been higher for longer in that inverted yield curve. Normal yield curve is, of course, short term. You don't have to pay as much to borrow in the short term, but you pay more and more as you go out in time. That is not the case right now in the United States. And that's one of the things that the Fed is worried about, because it really puts sort of a bit of a gun to their head that their mandate is dual in the United States. They're supposed to have full employment as well as keep inflation under control. And that's a tough road for them to walk. So what if interest rates never drop? What if they stay at this point, which is still relatively cheap, but given where we were 18 months ago, 2 years ago, interest rates are a lot higher than they were. What happens if the interest rates don't drop? Well, I've got a couple answers, and there we go, there's one. One of the stocks that I would buy would be JP Morgan, biggest bank in the world, really. JP Morgan, net revenue, as you see there, up 18% year over year, $34 billion net. These are all the different lines of business that JP Morgan has. Now we could put HSBC up there or any of these others. They would have similar lines of business that they could tap into to make money. But JP Morgan, that would be one of the banks that I would bet on if interest rates stay higher for longer. And although my clicker is not moving as fast as I'd like, for whatever reason, am I too far maybe away from here? Is that why? Here's JP Morgan, $195 a share. That you can see from basically July all the way through today. That's the progression of the stock over that time. And here is, again, I'm sorry that my clicker is not working very well. Just kind of lagging. But anyway, I'm going to describe a long call strategy to you guys. And since I've done this for a long time, it'll be pretty easy. So a long call, that's something that gives you the right to buy the stock for a certain period of time at a strike price, which is where you can basically call or take the stock from somebody. Still not working very well. It's not advancing. There we go. So I don't know why it's delayed, guys, why it's not moving along with it. But that's going to somebody else's presentation. There we go. So if we can go to just this next slide. There we go. Perfect. Stop there. Thank you. Should I stand over here to do it then? Okay. Sorry. Anyway, folks, I won't walk across the stage because apparently it works better over on this side. So at $195 a share, you would have to put up $195,000 to buy 1,000 shares of JP Morgan. Or you could buy the options that give you the right to buy it until January of 2026. And that option would cost you a total of $30,000. So now you could diversify. You're not tying up 195,000, and yet you have the same upside as if you owned the stock. The trade-off is you only have it for a limited period of time, till 2026. That's still pretty long into the future, the way I look at it. There we go. Risks to each position. If JP Morgan falls by 20%, I'm going to lose $39,000. Obviously, if it goes from here to here, it goes down 20%. 20% of 195,000, $39,000 loss. The option loss is limited to what I paid for it. The most I could ever lose on the option trade is $30,000. Now, here's where it, I think, it gets even more interesting, because if you look at what the return is on the position, and again, I'm so sorry that this thing is just not working. Advancing the slides. There we go. Perhaps I could just have them touch it when I say to move it ahead. Thank you. So the reward, if JP moves, there we go. If JP Morgan moves up, then we can make $39,000. Obviously, 20%, 20%. But the option holder, the leaps would go to 44,000, which would mean that we have a profit of $14,000 on a $30,000 investment. If we can advance the slide, that would mean that the shareholder would make $39,000, that's a 20% return, like we said. The option holder makes a 46% return. And you have a lot more money to diversify into other trades. So the option investor had that other $165,000 that they could diversify. They could be owning treasuries with it. They could be investing in Thomas's Bitcoin ETF. You could do so many things with that other money rather than just have it all tied up in JP Morgan. If we can advance to the next slide, thank you. So now, what if we decided that even though that's a trade that works, it's a great trade, what if we said, let's buy the right to buy the JP Morgan at $190 through that leap, but let's give somebody else the right to take it from me at $230 a share. This is known as a covered right if I was doing this with stock and options, but since this is leaps, I can do the same. I have the right to buy it at $190. I'm giving somebody else the right to take it from me at $230. I'm collecting $13,000 for a 10 lot for 1,000 shares of that. And if JP Morgan falls, yeah, we still lose 39,000. But now instead of me losing 30, if I'm wrong, I only lose 17,000, which is the 30,000 that I have for the option that I bought, and the 13,000 that I collected for the option that I sold. The net 17, that's all I can lose in that situation. And if we can roll to the next one, thank you. The rewards, well, if JP Morgan moves up 20%, again, we make $39,000. The leaps, the 190s, they would be worth $44,000. The short 230s, since the stock's now at 234, they would be worth $4,000. So the total that we make is $40,000. The leap investment was $17,000, so my return is 235%. And I had that money that I could invest, and if I would have invested it in, again, Solowin's ETF, when it was $50,000, and now that the Bitcoin is whatever, 66,000 or whatever, I'm making even more money. So, I mean, I think diversifying is always a good thing. The trade-offs with options are that they are a wasting asset. It's only there until January of 2026 in this example. I have to pick the right time frame and strike price, and investors sometimes misuse that leverage. All of us who have traded digital assets, like Brock, like Chris, like Thomas, that have traded digital assets know that the leverage you could get on digital assets was sometimes 100 to 1 or even more. And so you have to be aware of the leverage and how you can hurt yourself by taking on too much leverage. So let's take a quick look at if the interest rates go down, this would be one of my top buys in the United States. This is a company called Builders First. We've got Home Depot, but Home Depot does a lot more than just building. Builders First is really just for construction projects. Home Depot is also for your backyard, for barbecuing, for all kinds of other things than building homes and so forth. But as you can see, the stock has gone down for the most part, had a big drop in the last few weeks because with interest rates high, people aren't building new houses as much. If interest rates come down, we all know people would build much more frequently and invest in the housing market. So I said, as of, if we said $164 a share, 1,000 shares, again, $164,000, the option to control those 1,000 shares, and this time, instead of January of 2026, I just said, let's just go 6 months out. That would cost me $22,000 versus, again, $164,000. If Builder falls 20%, my 1,000 shares would lose $32,000. On the other hand, the option loss is always going to be limited to the $22,000 that I paid. That's the most I can lose on that position. So in this case, whoops, there we go, reward. If Builder regained 200, it fell from 200 to 164 about 2 weeks ago. If it runs back up by November, yeah, you make $46,000 owning the stock. But the option holder nearly doubles their money. The stock goes to 40, or the option goes to 40,000, and the same trade-offs as before. Options are wasting assets, stocks are a perpetual investment. If I pick the wrong time frame, yeah, I could lose. But that's why you need to get my book for free. Next slide, please. Thank you. This is what I used to do. I used to stand on the floor and say, bam, sold, as fast as I could, thousands of times a day. The more I do that, the more I can make. Sorry if I yell too loud. But I used to have no voice at the end of the day. My voice would sound like this because I didn't have any voice left from yelling. But now I have a nice robust voice again. But that's what traders on the floor do. They wear these jackets with the mesh sleeves and probably a mesh back on it, and they scream for 6.5 hours a day. But you can't really have more fun with your clothes on than doing this, because it is so fun. You can make money so fast. You can also lose money fast if you're not disciplined. If I told you guys anything about trading, the number one thing is discipline. The number two thing is discipline. The number three thing is discipline. It's all about discipline. Taking profits, you have to be disciplined about taking your profits. Taking losses, you have to be disciplined about selling out of your losses. If you do that, you'll make a lot of money in this business. And luckily, I've done this for 43 years. This is a system that we patented and trademarked called the heat seeker. That's my friend in the Marines and the Navy flying a jet, and he's the one that named it for us. He said, oh, that sounds like a heat seeker, John. What does it do? Well, in 1999, there were 300,000 option quotes per second. Like I said, that's when I sold a high-frequency trading firm to Goldman Sachs. Today, there are 11 million quotes per second. Why so many more? Did we list so many more stocks? No. But options went from trading quarterly to trading monthly to trading weekly, and now they trade daily in the United States. You can buy an option that only has 1 day to live if that's what you want to do. But again, it's just like a casino over here. Most of the people at the table don't know what they're doing and are going to lose their money. But if you have a little coaching and maybe some training, you can do very well, even with those 1 day options. So, high frequency trading, what is it? What does it look like? Brief description, I'll show you on this next slide. The brief description is that basically HFT, as you've heard it called, it's an algorithm that quickly buys and sells in microseconds. And I've got an example I'm going to put up on the screen to show you visually what an HFT or a high frequency trade looks like. So for instance, take a look at this one. This is a particular stock And as you can see, it falls. The white dots there are all trades, all the way down to here, and then all the way back up. The stock fell from roughly a little over $50.70, fell down here to about 49.25. So, about $1.50. Whoops, can we go back to that for 1 second? So, to that backwards, thank you. Okay, so notice as this is falling down here, and you said, John, you were going to tell me about high frequency. This is all 2/1000ths of a second. This is in the same second it did all this. So it fell $1.50 and bounced right back. And how did it do that? Well, that's what these systems do. They race ahead of orders. So the system detected that somebody was a big seller. And so the system sold ahead of them. And where did that seller get executed? Right here at 49.25. And then what happened? The system covered, it bought back. After it sold, it bought back, and it ran right back to the upside. That's all in 2/1000ths of a second. So that's why you don't want to compete against high frequency. But they are so fast, and they do this in options too. It happens so fast, but it's liquidity. If you're not trying to beat the high frequency guys, you can jump in on opportunities like that and jump back out. And that's what we do, but we don't try to compete with them in their time frame. I do it over days and weeks rather than 2/1000ths of a second. So in the past, this is again what I already described to you, why there are so many option strikes now and so much happens in high frequency trading. Next slide, please. So there we go, next one after this. This is showing you the growth of options, which when I started back here in 1981, 400,000, now we're trading 50 million a day. This probably is the only graph you'll see that puts Bitcoin to shame, Brock, is the growth of options. Options, there's nothing that has grown like this, folks. I mean, even Bitcoin from, 10,000 Bitcoins for a pizza to this is exactly that same sort of just monumental jump to the upside, and this is over 40 some odd years, 43 years. Next slide, please. So here's what I used to do on television, because for years, 26 years I've been on television. Here's Fox Business. I was on with him again last week. There's me in studio with Charles Payne, and we're talking about options and what happens because of both high frequency and that unusual activity, that heat seeker I talked about. So, and here was when I was on CNBC doing the same thing, talking about how do you find this stock, this needle in the haystack where it's jumping from here to here. You follow that fast money. You follow where the biggest trades are happening in the market, and then we publish that information and we run right along with it. So in this next example, you'll see, well, one more, sorry, past this. This is a stock called Bloom Energy. The stock was, in March, $9.62. Recently, they've been buying a lot of it, a lot of the options, all this. This is how we publish this stuff. Bullish call buying, bullish call buying, bullish call buying. The stock popped dramatically. I'll show you a chart right now. Take a look. The stock went from $9 to $17, actually $18, like that. It happened over, as you can see, basically from right here on the graph to here when it hit 18. So it doubled. The options on that made you hundreds of % return on that trade. This one, Union Pacific. Well, what happened in this one? Puts. A put option is the right to sell something, the right to sell and force somebody else to buy it from you. Stock was trading $244.66. Well, the stock fell to $235.64. So it dropped fairly dramatically, and whoever was buying those puts, for whatever reason, made a fortune as the stock dropped. Next example, please. Thank you. GameStop from this week. Beginning of May, they were buying calls in GME, GameStop. You know, this is one of those meme stocks. This is Roaring Kitty and those guys. Well, somebody jumped in and bought the right to buy 400,000 shares at $10.94. Here's the stock yesterday trading up to $25.42. So the right to buy it at 11 when it's trading here is worth $14.42. What did they pay? They paid $1.43 for something that's now worth $14. That's 10 times your money, 10x your money. Those are the trades that are exciting to me. Those are the trades that we talk about on TV, that we publish, and that we trade for our customers. Let's take a look at another one, NVIDIA, obviously one of the biggest plays in the world. Yesterday, well, as you can see, 523, which was Thursday last week, 524, which was Friday last week, they came in and bought a ton of calls. Whoever this trader is bought 37,000 call options. That represents 3.7 million shares of a $1,000 stock. 3.7 million shares of a $1,000 stock. That's a huge trade. So when we see that, we jump in, we publish it, and then we buy the calls along with these guys. Well, there it is. The stock ran from 1048 last Friday to $1,116. And as it did that, and why did it do that, by the way? Because Elon Musk says his X.AI, his AI company, is going to buy 100,000 of their M100 chips from NVIDIA at $40,000 a piece. And Musk says, I'm going to buy 100,000. Nobody else will even be able to buy them. I'm going to buy them all. Well, this is an example of another stock, in this case, another bullish call spread. Here it is, TKO. This is a company that owns the WWE, the wrestling, the US wrestling company, as well as the UFC, the fighting, the cage matches and so forth. Well, somebody came in and bought a lot of calls in April when the stock was $79. The stock popped to $93. Let me see, does it say how much long? Yeah. It was the 4th of January they came in to buy them. By the 22nd, so 18 days later, the stock makes this big pop because they announced they're going to be going on Netflix. So your Netflix is going to move, this one's going to move, and somebody knew. Somebody always knows. And that's why we have this algorithm, because we're always looking for, where is this needle in the haystack? Where is this option that's going to double or triple or quadruple? Well, now you know. So here's an example again of what you might do if you were trading options like me. 2,000 shares of this TKO at $79 a share would have cost you $158,000. You guys are good at math, I'm sure. That's pretty easy. 20 calls at $5, where they were buying those calls, is only $10,000. So again, you could say, I'm going to diversify, because instead of me having that 158,000 at risk, I've only got 10,000 at risk. So 2,000 shares, if the stock moves up $16, they made 32,000. That's $16 times those 2,000 shares. My 20 calls made $12, and that's $24,000 return on a $10,000 investment. Again, I can't emphasize enough. If you want leverage and yet you want less risk, you can only do it with options. And options are one of the great, that's why they're trading 50 million contracts a day. So again, the return, 240%. If you want returns that look like that instead of like that, it's not an option to just trade stock. If you're only trading stock, you're missing out. If whoever your wealth manager is only trading stock, you're missing out, because you could be getting returns like that. Let's take a look at another one, Humana. This is a big health insurer in the United States. one of the biggest. And somebody came in and bought the January 385 puts. That's the right to sell. Put is the right to sell. A call is the right to take. So they're buying put contracts. Here it is. The stock dropped $59 in one day. So that was almost 15% in one day. This stuff happens all the time. But when the stock fell, it fell because during COVID, people weren't going to the doctor as much, so the insurance companies weren't having to pay out as much. Now they're going in for all these procedures that they haven't been able to go into for a long time, and now it's costing the insurance company a lot more money. So they declared that, the stock fell $59. You can imagine the money you could have made if you were trading on that information. And again, this is all public information, but 1,000 shares of a $402 stock is $402,000. If I'm trading the puts instead, you put on a $1 bet, that's $1,000 because every option is for 100 shares of stock. So if you put on that, in the case of the stock, yeah, you make $59 times 1,000 shares, 59,000 bucks. Fantastic. You feel like thumping your chest. This one, the puts, the stock dropped from, you had the right to sell it at 385. You can buy it back at 343. So that difference is $42. So you made $42,000 on a $1,000 investment. That's 42x, 42 times your money. And again, you're diversifying, you're taking some of that extra cash that you're no longer pumping into the stock at $402,000, and instead you're able to take advantage and be in something like this with a lot less risk. Thank you. Here's another NVIDIA trade from back in February when they first had those breakout earnings. In early February, they were buying, the 5th of February, 2,500, December 650 calls. Those calls are $37 in the money. The right to buy at 650 when it's trading at 687 is $37. What did they pay for that right? They paid $142, a lot of money for those options. But they had the right to buy it at 650 then. Stock popped almost $100 on the earnings, and it popped to 773, so it's up nearly that $100, and those options exploded to the upside. Did it again last week, by the way, with the NVIDIA earnings last week. So these are the sorts of things that happen very regularly, my friends. Here's Viking Therapeutics. I won't ask for a show of hands, but in the United States, if I say Ozempic, everybody knows what I'm talking about. Because this is that fat shot that you take. I think you stab it in your gut or something like that. But it's a shot. It works. It's for diabetes, but they also use it for weight loss. Well, these guys have a similar drug, except it's an oral. So you don't have to take a shot. Which do you think is going to be more popular? Viking Therapeutics announced the results of their phase 2 trials. They still have phase 3 to go, but on the phase 2 trials of this oral medication, stock popped 66%. And as you see, just days ahead of that, they were buying the March 44 calls. Well, stock popped nearly $20 through that because the right to buy it at 44 when it's trading at 64 is 20 bucks. How much did they pay for them? $3.40. So you got about 6 times your money. I mean, these are 600% returns, 1,000% returns. I mean, crazy numbers. But you see it all the time in options. Sometimes it's Nancy Pelosi. Sometimes it's anybody in government that has that information that something is just today, or yesterday, I guess, in US time. Yesterday, Illinois announced that it's going to double the taxes on gambling through DraftKings and all these new online gaming companies. Well, when they did that, the stock fell 10%, like that. Well, anybody that bought those puts ahead of time made a lot of money yesterday. So again, these things happen all the time. Here's Robinhood. This is a brokerage firm, my competitor. So Robinhood, they're buying calls on the 13th of March, in February as well. Robinhood, and that was the right to buy the stock at 14.26. Well, the stock popped to $19.15. Once again, somebody cashed out big. Are they just lucky? I doubt it. Whenever I see a big trade like this, I want to follow along with that big trade. And I'd say it's probably a little over 80% of the time they are right. If they have that information and they can trade an option, they can make this kind of leveraged return. Another one, we could do these all day. Progressive Insurance. This is the Progressive Corp. The stock was 182. They were buying the 185 calls. Bang, the stock pops to 189 just a couple days later. Again, it's like having tomorrow's newspaper today. When we first developed this system, this algorithm for following these trades, we first did it, and we knew it was working when in 2001, September 11th, 3 trading days before 9/11, somebody bought a ton of puts on American Airlines and a ton of puts on United Airlines. And then 3 days later, they flew buildings into the Pentagon and the World Trade Center. Did somebody know? Yes. We turned our data over to the FBI and they tracked where the trades came in from. And it turned out it was where the terrorists had based before they came to the United States to learn how to fly planes but not land them. So I think there's always an opportunity to take advantage of stuff like this. Sometimes it's very evil people. Other times it's insiders. Sometimes it's the government. Sometimes it's just somebody really good. Sometimes it's, I'm sure a lot of you that invest or trade know that the biggest firms on Wall Street have people that attend all of these analyst days. And as soon as they hear Elon Musk or somebody say something at an analyst day, they buy or sell the stock. Right then. And that's what we're looking for, when somebody makes a big bet very quickly, and we follow along with it. So I think I'm through my time, am I? I think I am. Oh, 5 minutes. Okay. Can I answer any questions for you guys, or about, for instance, how do we do what we do, or where you can get that free book? It's not an option.com, by the way. It's not an option.com is where I'm not positive that we send them all the way to Hong Kong for free. We do in the United States, but maybe I can do a deal with Thomas and I can get you guys a bunch of books, or bring them over here for the next time we do one of these, Thomas. And by the way, I was remiss, I should have started my talk by saying Chandani, Chris, Thomas, thank you guys very much, Solowin and Sequire, for bringing me over. It's a pleasure to be here, and I've loved coming over and seeing Hong Kong. Never been here before, but I love it. Sir?
Yeah. Question, what do you see about the Bitcoin on the other cryptocurrency option? How do you see market growth?
The question is, what about Bitcoin and other digital asset options?
Yes.
I think. I have traded those a lot, and I think there are many more amateurs in that market than in my market. Traditional finance, there's an awful lot of people that know a lot about trading traditional finance. Digital assets, I think you have a real advantage, those of you who actually trade and invest like Brock, and you perhaps, sir. I think you guys have a real advantage. Right now there's, on the listed exchanges, or lit, as they say, exchanges, there are only a couple options that are available. And now that they've approved the ETF for Ethereum, there will be options on Ethereum as well. But where we ran into trouble was so many of the offshore exchanges, like Binance and so forth, FTX, had massive leverage for the options, but people didn't trust that they'd be able to get their money. So they shied away from that, except for, people with just a relatively small amount of money that wanted to turn it into a big stack of money. So they came into those big offshore exchanges just to try to leverage those investments. But I think it's so much better than staking to collect the call premium, which you're shaking your head, so I'm thinking you do that, or you've done that. But in the old days of crypto, which is only around since 2009, in the old days, it used to be when you stake, you'd earn a little extra for staking your Bitcoin, for instance. And now, being able to take advantage of those call options and selling out the money calls at 75, for instance, when the stock's trading, or when the Bitcoin's trading 66,000, I think that's free money almost. And I think you can make and enhance your yield an awful lot by doing that. So I think they're great, the options on those digital assets. Anybody else? Sure.
Thank you for your talk. It was really interesting to hear you.
Thank you, sir.
My question was that in the beginning you said that when the interest rates go high, and then you would put more money into construction and.
If interest rates come down, I'd put more money in construction.
Yes.
If the interest rates stay high, I would stick with banks like JP Morgan.
Okay. So what would you do if interest rates go very high? So what kind of companies would you withdraw your money from?
NASDAQ stocks. So you guys heard his question, which kind of, if interest rates went a lot higher, what stocks would I withdraw my money from? NASDAQ stocks. Because NASDAQ stocks were huge borrowers, as most of you know. And so they're going to get tagged with huge expenses. Now, somebody like Apple that has still, or any of the stocks that have massive cash hoards would probably pay back that loan rather than staying with it at a higher rate. Some of them locked in very low rates, but that's why whenever the 10-year in the United States moves up and goes to, for instance, 4.4%, 4.8%, 5%, that's when the NASDAQ was getting killed. I think the same thing would happen again if rates were to swoop and start going up. I think it won't happen until after the election that we might see a scenario like that, because if the Fed started moving rates up again right now rather than down, they would guarantee one side would lose and one side would win. It's already pushed pretty far in Trump's favor right now in the US because Biden is not, he's got the lowest approval rating of any president, including Trump, ever. So if they were to move up rates, that would be the end of it. And they don't want to pick, usually the Fed doesn't want to be the one that picks the president. So I'd say they don't want to move on rates. But if they did, it would be all over for Biden. No chance if they move rates up, in my opinion. All right. Well, I really appreciate your great work. I'm going to give you a hand because that was a great job by her managing the slides, because for whatever reason, I couldn't make it work right. But thank you. That was fabulous. And thank all of you. Have a great day.
Wow, that was an amazing talk. I love being able to spend time with John whenever I get to do that. I love going to lunch or breakfast with him. He has all the best breakfast places in Puerto Rico. So I love being able to sit down with him and talk and learn. It's just a wealth of knowledge around this area. So now we have a great panel for you. We're going to be talking about Asian-based companies seeking to list on the Hong Kong and the U.S. exchanges. Obviously, Solowin has done that and made the transition to the NASDAQ. So we have some amazing speakers with us here. We're going to talk a little bit about the regulatory considerations around that. Let me welcome the panelists that are going to come up and join us. Please, you guys are welcome to come up. We have Fred Ting, Kevin Sun, Gordon McBean, and Joel Vanderbilt. Hello, guys.
Hello.
How are you? So I thought what we could do first is instead of me introducing each of you, to give a brief 1-minute introduction of yourselves and tell the audience a little bit about why you're here and what you do. You all have a diverse background in the space. So instead of me doing that, I'd like each of you to take a moment and introduce yourselves. Please.
Good afternoon, everybody. My name is Fred Ting. I'm the responsible officer of the FCC Type 6 regulated activities of Solowin. So I'm here to share some of my experiences in IPO in Hong Kong and also last capital market. Thank you.
Hello, everyone. I'm Kevin Sun, partner of a law firm called Babalapa PLC. This is a boutique law firm. We focus on transactional work, especially on corporate securities. Actually, our firm represent Solowin in its IPO. So I'm happy to be here to share my firsthand knowledge and experience with you guys on the U.S. public listing.
Hello, everyone. My name is Joel Vanderhoof. I'm president of Cambria Capital. Flew in from Salt Lake City, Utah. This is my first time in Hong Kong and very fortunate to be here today. We're part of the new team at Solowin. They've are in the process of acquiring a U.S. broker-dealer, and that's why we're here today. I'm very, very grateful.
Good afternoon. My name is Gordon McBean, and I'm CEO of Cambria Capital. I work for Joel, and we announced in March that Solowin would be buying our company, our broker-dealer, and we're becoming part of the Solowin team and couldn't be more excited. I've spent the last few decades in the capital markets, raising capital for smaller public companies, but worked at some big ones too. And I'm really looking forward to what the future holds for us in the Solowin team. Thank you.
So we've seen over the years different cycles where the Chinese companies have come to the US and listed. And we seem to be seeing a resurgence of that again. What do you think is driving that resurgence now? Why do you think that we're starting to see that happen at this time?
Want me to take that one?
Okay.
So I actually, I worked on my first Chinese transaction in 2005. I actually lived in Shanghai 2006, 2007, and we brought over to the US. We listed many Chinese companies. And at the time, it was under, I think one of the reasons we're seeing more recently is the CSRC involvement and more of a regulatory, better regulatory framework, more comfort for investors in the U.S. that maybe got harmed in prior periods of U.S. listings.
And from a regulatory perspective, are you finding it to be easier to get these things done at this point, or?
Well, actually, in my opinion, things get a little bit more difficult because of the CSRC's involvement. Gordon mentioned that because all the Chinese companies, if they want to go public in the U.S., they have to go through this CSRC review, which obviously it's kind of a very recent things, but there are a lot of things that are uncertain, and the people facing these gray areas and really don't know whether it will be okay to go publicly use or not. It's a lot of uncertainties happening.
And Fred, what's driving the Hong Kong, based companies to want to go over to the U.S.? What's the advantage that you're finding your clients are asking you about? Is it just purely the ability to raise additional capital?
Well, I think when they choose to go to the U.S. market, it can increase the publicity and also enhance the branding of the company.
And are you guys seeing an inbound of a lot of companies wanting to list in the U.S. from the broker-dealer side? And is that why the connection has happened between Solowin and you guys?
Yeah, I think so. And if you look at just the overall general IPO market, we are starting to see a surge just in overall returns in IPOs from, you look at the last 3 years versus the last year and even 90 days, you're starting to see that trickle up. And so I think with the overall market doing well, it's starting to trickle down into some of these smaller names.
And when the companies come over, from a compliance perspective, you mentioned that they are getting more scrutiny from the SEC when they're coming over. How much more difficult is it? And is the SEC, do they make it so difficult that it's just so painstakingly hard for these companies to get it done? Or is it just a matter of making sure that you have everything in order?
Yeah, I think that for SEC, basically, it's a disclosure issue, right? As long as you fully disclose your business, your risk factors, everything, it's transparent. I think the SEC is very, in my opinion, is very predictable. So their timeline, how long it takes them to get back to you, like the first round comments, you have to wait about 30 days. And going forward, for each amendment to your registration statement, usually take them 2 weeks to get back to you. So it's very predictable. So I think, in the past several years, we see SEC announce a lot of statements, basically requiring Chinese companies to make more disclosures in the registration statement. For instance, like the cover page of the prospectus, we see like 10 years ago, maybe only needed half page long prospectus cover. But now, for Chinese companies, should easily take you like a 4-page, 5-page long for the cover, which basically reflects the SEC view that we want China-based company to make more robust disclosure of the risks.
And what's the time frame that you're finding for your clients that it's taking to get through the process with the U.S. regulators?
It usually takes about between 6 months and 12 months. When I say 6 months, usually obviously many of our clients came from different areas, right? It could be European companies, Asian companies, US domestic companies. For these companies, they don't have to go through this so-called CRC review process, so it will probably take much less time to finish. But for PRC companies, it's more likely it will take more time, and very likely it will take more than 9 months or even close to 12 months to finish the whole process.
And Kevin, choosing the right underwriter, correct? They can maybe speed up that process a little bit. So.
Absolutely.
So let's talk about that. What's the appetite in the U.S. capital markets for companies listing, from this part of the world? What are you guys seeing? Are you finding the investors that are willing to invest in those transactions?
Yeah, I think we've seen a number of Chinese IPOs just this year alone. There's been a lot of successful transactions, and then looking more recently, Solowin go public in Q4 last year. So the appetite is there. I just think in general, for the micro cap space and the nano cap, micro cap space, be very, very difficult. There's been there's been years of malaise there, and it's really just it feels like it's starting to bubble again. What we had always seen in the past in these kind of downturns and low liquidity levels in microcap is it takes M&A to kind of get that going again when you get these disparities between the large caps and small caps. And we're starting to see that M&A activity start to happen, which will create more demand for IPOs. That's what we're seeing here in the near term.
And is it the same investors that are looking at other Chinese transactions, or are you finding new investors that are looking at these transactions just as if they were another microcap, nanocap stock?
Yeah, I think the success breeds that. You see these deals working, and the audience that buys the deals is growing. So I think that audience is growing with the success and the returns.
That's fantastic. So are there any regulatory issues that your clients see when they list in the US back in Hong Kong? Does it, what's the implication for the company back home when they end up listing overseas? Or that was for you. No, I'm sorry.
Well, I can tell Hong Kong has two capital markets, the main board and the gem board. In current years, companies successfully listed on the gem board is very rare. So we can compare the main board and the Nasdaq capital market. Okay. I have experiences in joining the IPO projects in Hong Kong and Nasdaq capital market, and I can see three differences in these two markets. Firstly, I can tell the listing cost is higher in Hong Kong. When an applicant submits an application on main board, they need to engage a sponsor, and the sponsor is totally responsible for the project on every aspect. And the sponsor engage their own lawyers and tend to engage Big Four auditors. And so the legal costs and the audit costs are greatly increased or even doubled. Okay. Secondly, the profit requirements are higher in Hong Kong. An applicant on main board should have an operating history for 3 full financial years and a net profit a lot less than 80 million Hong Kong dollars. It is equivalent to US dollars 10 million. It is a great number to small cap companies. Last but not least, the listing time is longer in Hong Kong. It usually takes 12 months for a company to be listed in Hong Kong. And remember that time is money, especially for small companies. So I highly recommend the smaller companies to list on the Nasdaq capital market. And I think Kevin is going to tell us more about how to achieve this.
Yeah, it looks like there's on the board here are the breakdowns for each of the levels. You want to cover that?
Sure. Yeah, so I think in my experience, most Asian-based companies want to list in the US on NASDAQ. So as many of you know, that NASDAQ has 3 tiers of markets. The top one is called Global Select Market. The second one is Global Market, and the third one is Capital Market. I think my experience is most of companies are small cap companies who go to Capital Market. Capital Market, you have 3 standards to meet. Obviously, you don't have to meet all 3, right? Just to meet one of these 3, you will get qualified to list on NASDAQ. So if you have net income, which gives you more flexible you don't have to raise $15 million in the IPO. Instead, you can just raise $5 million. So nowadays, if there's difficulties, to raise the money in the US for small cap companies, if you have net income at least $750,000 in the last fiscal year or 2 years of the last 3 years, you will be able to use the net income standard, which allows you to raise small amount of proceeds in the IPO. The other two standards are pretty much similar, which requires you to raise at least $15 million in the IPO. Nowadays, sometimes for some companies, if you don't choose the right underwriter, right auditors, you have problems to raise such a big amount of money. So that's the major differences of these three standards.
And on the raise of getting to that level of the raise, is that you guys finding that achievable from an underwriter perspective? And how's the underwriting working? Is it on a best efforts basis? Is it being done fully underwritten? How are these transactions getting accomplished?
Yeah, there's a lot of people out there say they're firm commitment, but it doesn't mean a thing. It's a good sales pitch for an investment bank. But these are all best efforts, pretty much, even if they're called firm commitment. But we've found demand's been good in the US. We've been getting some pretty good sized deals done in the kind of 10 to 25 range. So we're seeing success in demand, and retail demand's pretty good, we're finding, on a broad basis. So yeah, I think the appetite is improving for sure.
Are you finding companies coming the other way? Are there US companies that are coming to list in Asia? So are there NASDAQ listed companies or OTC listed companies that are trying to get listed in the Asian markets?
You seldom see this kind of situation because now the trend is small cap companies prefer to go to US and first to choose the last capital market because the profit requirement is low and so and also the cost is low.
What are the opportunities for the structure of the financing that you guys are seeing for these companies? Are they any different for the Chinese companies than they are for the US-based companies? Are investors seeking additional protections? Do they put Brock was talking about this yesterday. He was negotiating for something in China, and the person he was negotiating for was saying that they should get a premium because it was in China, and he was saying it should be somebody else was saying there should be a discount on it because it was from China. And so, what are you guys finding when you're talking to the investors out there?
Yeah, I think on the pre-IPO round, most of the time the investors that'll want some warrants included, and there may be some sort of yield on the instrument, like a convertible preferred, no warrants, and it's just for straight common. So,
yeah, I would say that I don't think there's any difference between what the Chinese companies are having to give up versus US companies. I think just in general, there's a dozen hedge funds out there that are financing a lot of these deals, depending on the investment bank you use. And you'll see typical styles of huge warrant coverage and stuff that really hurts the future of that issuer, to raise capital in the future because they've done an IPO that wasn't structured way too much in favor of the investor. And that investor is not your everyday guy. It's a hedge fund that doesn't really care the future of that company. So we certainly avoid that stuff and look more for fundamental investors.
Right, yeah. So I think in the IPO perspective, I think pretty much the underwriting agreement is very standard. I think I only see one provision for some Chinese companies that showing that they want to have an escrow account set up. So they will have to, at the closing, you deposit a certain amount of proceeds into the escrow account. The purpose of escrow is to protect the underwriters. Maybe after the IPO, they may have to show the litigation kind of things, so the underwriter can use these escrow amounts for the lawsuits, to cover the legal expenses, those kind of things. So that happens in several deals that we experience in the underwriting system. Have these escrow accounts in order to protect their interest. That's the thing. But for other, kind of financing, like the follow-on offerings, private and pipe transactions, registered direct offerings, you will see more toxic protections, which is detrimental to the interest of the issuer in order to protect these hedge funds, institutional investors, these anti-dilution provisions, the warrants, these kind of things. It's very difficult because the warrants usually last 5-7 years, and the company will have this kind of covenants, to suffer that long period of time. That would be very challenging.
Yeah, well, if you can get it done without that, then you can get it done without that. But if you can't, then that's what you need to do. The market drives that activity, right? So it all depends on the strength of the company itself and how good the business is. So the better the business, the less the company needs to give up along the way to get their capital. And we see this in the private side of the market. A lot of times, companies raising so much money in the future value of the business, and then a lot of times in the public markets, the hedge funds are trying to leverage the downside. All they're worried about is how do they protect the downside of the business, and it's an important side from an investor perspective. But if the companies can perform and perform well, they can get rid of those things. So if they do have to give up warrants, built-in warrants and built-in convertibles ultimately become a financing mechanism for these companies in the future as well. So maybe not so bad all the time. You may have to give up something at a current valuation or maybe a little bit above the existing valuation in the future. The market drives that, right? You guys but that's your job, is to find the people that don't need those types of protections, and that job gets harder and harder based on the quality of the company itself, whether they're from China or from South America or from the United States. It really depends on the sector and what's going on. So what are you guys looking for in the companies that you're underwriting? What's the ideal candidate coming out of this market to list into the United States? What do you find need to be, the type of revenue, the type of net income, or where are they in the cycle that you find that you have the best opportunity?
I would say the first thing we always look at is, who are the jockeys, who are running the business, and what's their track record like? Do they have skin in the game? Have they done this before? And so that's the first area we look. And then in addition, what sectors are hot right now, right? Which doesn't make much sense to do so far. So there's not necessarily like a revenue or net income metric, I would say, we go off. It's more the people behind it, and does the sector make sense? And can we come up with a deal that's a win-win for the company and for the investor? The company always wants the highest valuation possible. Investor always wants the lowest as possible. And so it's kind of coming to that middle ground where it's a win-win.
Yeah, I totally agree. Yeah, I think, in terms of the kind of companies that are, and it's funny, you can go across many industries, and a lot of these companies, even though they're not in the same industry, they have a lot of the same characteristics, the deals that people like. There's a growth trajectory in that business. There's a market opportunity that makes sense. There's protection around whether it's IP or that kind of stuff. How strong is that? And then, of course, we always go back to who's running the company. It's so important. We spend an inordinate amount of time getting to know management teams and really understanding. We spend a lot of time doing that. So we find that's probably number one, because you could have a mediocre product that's being managed by a great management team that's going to outperform a great product by a mediocre management team. So I'd say that's the most common thing we're looking for.
You know, you mentioned something that's really interesting on the IP side of things, right? So from the legal side of things, when you're seeing a lot of these companies that are wanting to list in the U.S. What type of IP protections do they have in China that are all that transfer over into the United States, and how much time is spent around the conversation of protecting that IP? Because that's a big narrative that we hear in the United States, right? Is about the protection of IP for Chinese or even U.S. products in China, and I would imagine the same for Chinese products coming into America.
That's always a difficult question for China-based companies, and obviously the SEC pay a very close attention to your disclosures to make sure you disclose all these risks in your registration statement. Make sure you disclose the issue of the IP protection. Obviously, we see a lot of companies are trying to strengthen the protection of their IP system, and a lot of companies already made a great progress. And there's still a long way to go, because I think it's very important for investors to feel they are protected if they invest into this company, and that their IPs or other stuff are really important for the business, and they are sure completely protected. But this is still a long way to go. But we see the progress that we made by the companies.
And you guys hear this question a lot on your side as well, when the investors are looking at the companies?
Yeah, we actually, we took a company public last year that actually owned a patent, the basic patent attorneys as part of the business. And so we spend a lot of time really getting to know IP, whether it's a Chinese company, a US company. We feel like in terms of that diligence process, it's pretty unique, and we rely quite a bit on them to go through all the families of patents, where are the challenges. So we typically run a full report from that group, and it's worked well for us so far.
Now, you spent a lot of time here, Gordon, in China, right? Years.
Yep.
And what have you seen as the change in the market, from when you first came here compared to where it is now?
I think, the changes I see mirror the changes in microcap in general, microcap and nanocap stocks. When I first came here, we would bring Fidelity, Wellington, and all these big mutual funds, and even small fund managers. There was a lot of fundamental buyers of microcap securities. There was dozens of funds that we would bring over, and we get the deals financed institutionally. And now, that the same thing has happened for US microcap. So I'd say that's the major difference. You're having to go to a completely new investor group to get transactions done. But I don't think it's just specific to Chinese companies. I think it's across the board.
Are you finding that there's hedge funds that are popping up here in Asia that are willing to invest into this leap over to the US capital markets? Like, are you guys seeing those investors step in as well?
Yeah, that's part of why we're so excited about what we're doing with Solowin and becoming part of the Solowin family, because we think there are pockets of capital here that other banks in the US are not accessing. So we see that as a major part of what we want to be able to achieve going forward. And that is being able to have a really balanced investor base between investors here in China and Hong Kong and the US. That's really what we see as a big part, what we're going to do with Solowin.
So you'll market the US transactions over to the investors over here?
That's certainly part of what we're planning to do. Yeah, we'd love to be able to do that. We'll
Is
see
there
the appeal. I think the appeals here are good U.S. companies also.
And what, from a legal perspective, what kind of filings need to happen around that for those companies? And what are the rules? Because if US companies are raising money overseas from non-US citizens, there's, not as much worry from the SEC. Does that save a little bit of the headache in getting these, companies listed in the United States if the bulk of the financials are coming from out of the United States?
My experience is, if you go publicly in the U.S., listen, say NASDAQ, NASDAQ will pay very close attention to who are the investors. Is the last, I should say last, but also the most difficult part of the IPO process. So, like for Solowin, they complete SEC review like in 6 months. Done. SEC is clear. However, you have to go through the last step, which is clear the NASDAQ review of the allocation list of investors. NASDAQ pay very close attention who are the investors, whether they are Chinese investors, Hong Kong investors, or Asian investors, or US investors. First of all, they want, majority of the investors are US investors, because that's the reason you go to list in the US, right? If all the investors are from Asia, why not go to Hong Kong to list it here? So yeah, that's the thing, they pay very close attention to that, and for many Chinese or Asian-based companies, they feel that the last step to cross, before they cross the finish line, is the most challenging thing, which is very often out of their control. So they have to work closely with the underwriter to figure out which is the best way to get this allocation list done, as quickly as possible.
And once these investors are invested in the US securities, how difficult is it for them to exit those securities from being offshore? Are they under the same scrutiny of the 144 rules that the US citizens are have to oblige by? I would imagine that's global. But then also, how difficult is it for them to get access to the trading accounts to trade out of these securities?
It's an interesting question because it's one that generally doesn't pop up till after the fact. That it's a shareholder calling the CFO maybe 10 times a day saying, I can't get my shares deposited anywhere, can you help me? And what we've found is, if you can, as the issuer, if you can structure everything correctly from the get-go, it avoids some of those issues. So what we see that happens is maybe from a legal standpoint, the shares are registered or they've held them long enough they can sell under 144, but mechanically it wasn't set up properly in the first place. And so from the broker-dealer's point of view, they're really not worried about selling an unregistered security. They're worried about getting hit by a regulator with basically regulatory action on the AML side. So a way you can clean that up is buying direct from the issuer, making sure that the funds that you're paying for the security match your subscription agreement. We've seen investors run into trouble where they're paying from an entity and they're putting in their individual name or vice versa, or buying between multiple parties. The transaction's completely legal. It's registered in most cases, but it's just showing that paperwork trail of who originally bought all the way back to the issuer. Paperwork and money trail. So just keeping it, my best advice is just keeping it simple. If there's some consultants in the room or advisors, make sure your advisory or consulting agreements specifically outline what you're doing for this company. And make sure you've got follow through that you can prove that you did what you did. Because it's I know we're getting on depositing the shares, it can be difficult. On all of our IPOs, we've got a a very unique setup where we built some technology. It's called My IPO. We've rolled this out to US investors. And so we've got the ability to take on thousands and thousands of investors, and the shares just go right in the account. They can trade day one on the IPO. For those investors that maybe bought pre-IPO and so forth, we've got a relationship with a self-clearing broker-dealer in the US that has a ton of experience dealing with this. So we're able to help some of those folks, and we're helping some of the referrals from Solowin with that currently. So anyone else have anything to add to that one?
That's your world, buddy. You know that stuff really well.
Yes, I do, all too well. So we have around 5 minutes left. Why don't we see if anybody in the audience has a question for you guys? Is there any questions out there that you would like to ask this group about what it takes to list your company in the United States and the process of doing that? Or another question, I hear somebody over here. Maybe they have a microphone for them.
Hi, thank you very much. There was a very interesting discussions about listing in the US. For micro company or smaller company that is listed in the US with Asian background or Chinese background, would there be any difference in terms of subsequent fundraising versus indigenous American company of a similar size? Thank you.
He's asking.
Was that, I didn't know here, is it as easy to do a subsequent raise?
Yeah, because they are saying for Asian company that after listing in the US after the IPO, it's very hard to do subsequent fundraising.
Well, I'll let Kevin touch on the registration that you would have to go through to be able to do that, but there shouldn't be anything that makes it more difficult versus a US company, but I'll defer to Kevin.
The question is not about regulatory issues, it's about the investors' interest.
Oh, I apologize. Yeah,
would there be analyst coverage for Asian background company, etc.?
Yeah, I would say that it's performance. If the company performs as they said that we're going to do, that it makes it a lot easier. If you've failed in you haven't lived up to the expectations that were set when you went public, that's why you really need a good investor relations firm. It's very, very important to have that representation. It's important to go to the conferences. It's important to get in front of analysts and build out audiences. That's a major part of being a public company in the US. And a lot of Chinese companies I've seen trying to cut corners there and not do that right. But if you do it properly and you build an audience and you're performing as a business, there's absolutely no reason that you wouldn't have the kind of acceptance that any US company has.
And one instrument that we've seen that it doesn't work well for every company, but it can work well for some, is after you're public for 12 months, depending on the type of business you are, an ATM can work. And it gives you the flexibility of, we've seen a lot of these smaller microcap names, they'll have moments of extreme liquidity and price action, sometimes very favorable, and in some cases, maybe ahead of where it should be. And we've seen some of these companies that have put in place an ATM where they're not committing to any sort of financing, but if the opportunity's there, they can release some shares off that and raise capital on demand in a very inexpensive process.
Yeah, there's a
Go ahead. Yeah, it's and Kevin, you can go to the legal side of it, but it's essentially a way that you can pre-register shares, and you as the company basically sell those shares in the open market. So instead of going to your banker, trying to negotiate a deal, your deal's live in 6 months, you basically got something pre-registered where if your stock's at, let's say, 5 and runs to 20 real quick, you're not calling your banker at that point. It's, you've got something in place to just release shares in the market and raise capital, maybe at a more advantageous level. And like I said, it doesn't work for every company, but what we found is for some of these small microcap companies, they'll have very tight floats, and for whatever reason, you might get a trading group in a sector that's playing different names, and then boom, you know, you've got all of a sudden all this liquidity in your stock for a short time period. But if you don't have that in place in advance, it's too late 6 months later or 3 months later to put something in place.
And a key point on that is that you have to wait 12 months after you're public. So the ability to file an S3 registration is, and I don't know, for a foreign company, is it an S3 still?
F3.
F3. Okay, so an F3, you have to be public for a 12-month period before you can do that, and then you need to stay current with all of your financials, or they put you in the penalty box and take that right away from you for a 12-month period. So so long as you're current on your financials, it's a fantastic tool for small public companies to raise capital when there is liquidity in the stock.
Great. So it's very important to find the right underwriter.
Yes, it's very important to have a good underwriter and enough money to last a year, if not more.
And we know a great one, so we can let you know who that is.
Yeah, thank you.
There's one more question right here. Right here.
Thank you for the great panel. I'm Michael Healy, run a decentralized exchange. My question, called UNET. My question is, what's your perspective on blockchain-based exchanges superseding, current Coinex or NASDAQ, and how do you feel about tokenized securities?
We're regulated by FINRA and the SEC, and they just love any kind of digital currency. It's amazing just how difficult it is. I was at a conference and I made a presentation, and I came off the stage and I had like 5 calls from FINRA on my phone, and I was like, oh, it must be something up. And I called my examiner and said, hey, what's up? And she asked me, do you do anything in cryptocurrency? I said, no, we don't. And she hung up the phone. That was it. So it's very difficult in our world to be, and that will change. There's no doubt. And Brock will touch on this later today, but things will change and the world will catch up. But until that point, we're not looking to blaze a trail there, because it's pretty ugly when you get these regulators coming after you. It's tough.
Yeah, if the liquidity was there, it'd be amazing, right? If you could find the exchanges that are willing to list securities that are on a blockchain-based exchange, whether it's centralized or decentralized, that some regulator's not going to crawl all over you about, it'll be amazing, and it's inevitable that it's going to happen. It's there. It's gonna take place. It's just a matter of how much liquidity is there for tokenized real world assets out there. Is there, can people trade real estate? Can they trade art? Can they trade cars? Can they trade watches? Can they trade, even securitizing or tokenizing US based securities and having those trade on cryptocurrency exchanges? That would be fascinating. I think that there's a big market ultimately for that, and it's inevitable that it's going to happen. And we were actually having a conversation about this earlier. It's going to be interesting to see what happens to the margins of the NASDAQ and the New York and the CBOE when the younger generation of traders who are okay trading on Uniswap and understand what it means to make their own market, once the world becomes that individual
that more people understand that than not, what happens to the market. So it's going to be, we're in a fascinating period in fintech. And, you know, the old guard of how things have been done for so many years is transitioning quicker than anybody thinks. Well, thank you very much. We really appreciate you guys. And thanks for taking the time to be with us here today. Now, Gordon, you're not going anywhere, right? You're staying up here. You have another talk.
Beautiful.
Let them
Should
take
we
the
do
chairs.
that while we're up here?
You know, we'll let you
How's
take
your
over
voice?
from here.
All right. Well, great. You know, I thought I was speaking before the panel, so I stole a little bit of my thunder and the reason why I'm here. As I mentioned earlier, my name is Gordon McBean, and I'm CEO of Cambria Capital. And in March, we were delighted to announce that we're being acquired by Solowin, and we will become the U.S. broker-dealer arm of the Solowin business. So it's a super exciting opportunity, I think, for ourselves as the Cambria team, as well as what we can do for Solowin and increase their presence in the United States. So I'm certainly very honored to be up here talking about this, because this is brand new and this is the first time we're actually talking about this. Well, one of the things we're going to be doing in the U.S. and working along with both teams here, the Solowin team here and the Cambria team in the United States, is that we're starting a fund that will invest in the kind of deals that we'll be doing, as well as IPOs and follow-ons from other investment banks, leading banks in the United States. Again, repeating myself from some of the stuff that I said on the panel there, but you know, the markets are changing right now. We feel the timing is excellent for this product. There's been this really tough market for IPOs over the last few years. We had the bubble of 2020, 2021, when we had the Fed printing money and money rolling into companies at a crazy pace at crazy valuations. And we're still going through the hangover from that, but we're now starting to feel like we're coming out of it. So some of the things we are seeing is that valuations are a lot different to what they were at the last IPO boom in 2020. You know, things are normalizing, and it's allowing us to see many, many transactions that are priced properly and businesses that are right for the public markets, and an acceptance in the public markets case. Thank you. You know, hopefully I do better job than John with this. Just that one there. Thank you. So these are the disclaimers. Again, I think I just mentioned also that we're regulated by FINRA and the SEC, so we have to tell you all the time that, you know, we some of the stuff we'll say today is forward-looking and it might not materialize. So, but anyway, this is the title: Targeting Outsized Returns. So looking for those unique opportunities that we feel we have access to, whether there's deals we're doing ourselves or whether there's deals that banks that we work well with and banks we respect are doing. So again, there's really this opportunity at this point in time where this market is just ripe for getting involved in IPOs. And for those investors who may not get access to IPOs and don't get access to what's happening in the capital markets in the U.S., you know, this is a great product for those folks that want to participate in these markets. click this again. Here we go. This is just, I won't spend too much time on this slide, but this is just really to have you see that we're using the best, absolute top legal, accounting, and custodian partners for the fund. It's just a regular, the hedge fund fees will be just as you see quite often, very, very standard fees that we'll be charging on the fund. This here is, this is US IPOs. I think, as we all know, the US markets have performed really, really well over the past year. And you may not know that the IPO market has actually outperformed the overall stock market in the United States. So, and again, feel like we're just getting started here. This is something that we're seeing more and more great opportunities, better valuations, and I'll just touch that in a minute. And these are, this is really, again, getting into the kind of stuff we're going to do. We're looking at investing in high quality IPOs. We've got a diligence team and a team of analysts and experienced folks that have been around the capital markets for a long time. So we feel that we're going to be the stocks that will be within this fund will be well diligenced and quality, very, very high quality businesses. The kind of offerings we will do will be, obviously, initial offerings is where you'll typically see the most pop in value if we do that right. But there are some times where you get, if you are a fund and you've got a decent amount of capital, you're going to get a call on transactions, on follow-on transactions that are really that really work. An example of that is you might see a company that everybody knows they need funding, and if they get that funding, that in itself is a catalyst for making it happen. So those kind of deals are out there where you get a call. If you know the bankers and you know that these underwriters well, you're going to get that call on that, even on that follow-on. And once that typically is a discount to market, and typically after in these good deals, you will actually see the stock run not dissimilar to what you can see on an IPO. This is the team here. Again, on the Solowin side, a fantastic, incredible experience and talented folks. And then on our side, these are just myself and Kun Tao. Kun worked with me for many, many years. He's been working on cross-border transactions for the past 10 years, but he worked with me in the investment banking world for about 10 years prior to that. And so that's the team there. And this is really just getting into how do we do this. We look at all these things, and again, I talked about a lot of this when we were on the panel there, but the things we really look at are, what's the sector doing? I know Joel touched on that on the panel there. If it's a hot sector, it's where you want to be. If it's a sector that's out of favor, it's less likely that you're going to go out and try and raise capital and go public. So sometimes that's that's just stating the bleeding obvious, but that's a big part. You know, we want to see a very strong sector that's and then we roll from there into the underwriters we're working with. Very important. You know, we'll be very, very selective on the banks we work with on the deals. And then the diligence, that will all be on our part, on our team. We don't rely on the underwriter to, whoever that lead, doesn't matter who the lead underwriter is. We will be doing our own due diligence on those companies because we feel we've got as talented a group of analysts as anyone else out there. Valuation obviously becomes very important. And as I said earlier, those valuations are a lot different in 2024 than they were in 2020, and it's a much better market to be a buyer of these deals. And then also understanding, look, if we see that it's a hot deal and we're getting a decent allocation in that would really have more impact on the amount of dollars that we'd invest in that deal, knowing that there's really versus the quality of the deal, but it would be an important factor on the amount of assets that we put into that deal. If we see it as something's 5, 10, 20 oversubscribed, and we can get a decent piece of that deal, it makes sense for us to have that as being an important factor in that process. And then, of course, market conditions. If the market's really bad, we always have the choice not to participate. And that's always a nice. We don't have to put the money to work, but if the market's right and the deals are there and the quality's there, then we will participate. And it was funny. I was talking to someone earlier, and we were just talking about this fund and what are the risks. This is there's risks as you know in any investment, but typically on an IPO you got a pretty good look into what it's going to look like, certainly in the short term. But you do have to. The diligence has to be done. You really have to take as many of the risks out of the equation as you possibly can. And that's just hard work. That's understanding the company, understanding the competitors, understanding the suppliers and the customers. And these are all things that you just have to, there's no shortcut to doing the diligence on these transactions. But you could be in a deal and liquidity dries up pretty quickly. That's always a risk when you're in an IPO, particularly for smaller companies. That liquidity could dry up pretty quickly at times. And then, regulatory and compliance risks, of course, you just never know when a new regulation could come down and, maybe have an impact on the IPO or follow-on market. That's always there. So the mitigation of that, as I said, really, this due diligence, that middle one, if you do that right, that's the best risk mitigation that you can possibly do. Really know the company, and as I said, the competitors, the customers, their suppliers, and that's where we feel that we're gonna outperform on that side. So this is, again, I'm getting down to 1 minute, so I'm gonna speed up here. But typically, as you know, I think everybody in here is familiar with funds and how that works, but we'll have quarterly, annual reports. We'll be very responsive on the investor relations side. We understand that's very important to always talk to our investors and keep consistent communication and transparency in everything we do. That's going to be a big part of what we are, and then of course we'll be on the road talking to as many people as we can. And I think that might be the last slide, so I think I did pretty good on that time, huh? Well, thank you, everybody, and I look forward to seeing everybody later today. And I'm going to be around, and Joel's here, and of course Thomas and Lily, and thank you for allowing me to be part of this great occasion today. Thanks very much.
Thank you, Gordon. Appreciate it. So as I get the stage set here for our next panel, I want to take a moment to introduce you to the moderator of the panel, Poseidon Ho. Poseidon is the founder of Outliers Fund, and Outliers is has done 3 funds so far, and Poseidon started his career at MIT while he was in school, started investing in the cryptocurrency Web3 market, and he was doing so good at it that all of his fellow classmates wanted to give him money to do that for him. He ended up raising a couple of $1 million from his classmates and teachers who all wanted to give him money. He turned that $2 million into around $30 million, and then continued to do the same thing again and again. So he has 3 funds that have all returned over 1,000% in short periods of time, and now is entering into his 4th fund with my company, DNA, and DNA and Outliers have teamed up to launch Fund 4, and we hope to deploy around $200 million into some of the best innovative
Web3 projects in the world. So Poseidon is known for having read more white papers than anybody you've ever met in your entire life. We said this in a meeting we were at one time. We were in Dubai at the Token 2049 conference, and somebody was saying Dubai, that Poseidon had read more white papers, and some guy was there and said, well, you never read my white paper. Poseidon said, well, what's the company? And the guy said, the name of the company, and then Poseidon started telling the guy what was in the white paper. And so he had read the white paper that the gentleman was speaking about, and the gentleman was super impressed by that, as was everybody else that was sitting around the room, including myself. So Poseidon, welcome to the stage.
Thank you, Chris. And up next, we're going to welcome my fellow panel speakers on stage. It will be Clara Chu, the CEO of QREG Advisory Former FinTech, Head and Licensing Director of Hong Kong SFC. That's good. And then up next, there's Gary Ju, Executive Director and Head of Regulatory Affairs of OSL Group. Up next, we have Marco Lim, Managing Partner of Wine Capital. Last but not least, we have CG Zhou, CEO of CPIC Investment Management, Hong Kong. You all have your microphone? Great. Okay. Right now it's the time for me to prove that I've done my homework. First of all, thank you, Chris, and thank you, Brock, thank you, Chandini, and all the Solowin team for having us. My name is Poseidon, and I want to start off the panel by throwing a little ice-breaking question to warm up the stage of the panel, which is, we are talking about fintech in Asia. What is the one thing you think most people don't know about, or most people in this ballroom might disagree with you? And also start with your brief introduction. Clara, would you like to start first?
With a brief introduction of myself?
Yeah, a brief introduction of yourself, followed by one thing that you think most people might disagree with you, or might not. I can actually, I know that I'm putting you in the spot, so I can take a lead and then start first. And then what kind of controversial things that we can say or cannot say. I can draw the boundaries and take a lead. So first of all, my name is Poseidon. As Chris mentioned, I'm the founding partner of Outliers Fund. Over the past 9 years since I dropped out from MIT, there is only one thing that I do, which is investing in the primary market as a venture capitalist, a manager in Web3. And the one thing that I think most people might overlook here in Hong Kong, or even far in Europe, United States, might be a lot of people don't fully capture the rapid rise of Southeast Asia in these days. I would say in Philippines, in Indonesia, in Vietnam, they have a huge, large unbanked population that leads to a high demand of digital payments and P2P lending solutions. Like policies in countries like Singapore with its fintech sandbox allow innovations companies to take new products, launchpad in a controlled environment, just like Hong Kong. And digital payments platform like Indonesia's GoPay or Vietnam's Momo have rapidly growing user bases demonstrating a significant market demand. So I think Southeast Asia, towards the topic we're talking about today, fintech in Asia, might be something that people might not realize or might be overlooked. Yeah. Would that said to be a good example?
Very good
for you to start the whole dialogue and conversation today like this. And then, my background, previously I worked at the Hong Kong Securities and Futures Commission. I was the licensing director as well as the fintech head for some time. If you ask me, for example, what something that the fintech sector or the fintech industry players, they don't know exactly. For me, coming from the regulated background, I would say, I see it as fintech industry players, most of them, they don't know the mindset of financial regulators. That's a big problem here, because sometimes I see a lot of these fintech industry players, they are trying to very fast to do the work in a very high standard, doing all good for the industry and the society as a whole. But unfortunately, because they don't know the mindset of the regulators, then from time to time there are roadblocks. And so I think it's very unfortunate. And I think it would be really good if we can try to improve this kind of situation.
Thanks. Up next, we have Gary.
Thank you. I'm Gary Chu. I spent about 20 years as a legal counsel in different kinds of financial institutions, buy side, sell side, fund managers, and more recently sort of crypto, so sort of going from the wider end of the financial spectrum to the other end. But in terms of something that people may or may not agree with, and I sort of try to group crypto into fintech for a second. Sometimes we sort of hear about the 996 phenomenon as being sort of this Chinese fintech thing.
This crowd knows 996 that Gary is talking about. At least most people from the West might not.
Okay, bugger. So 996 is 9 to 9, 6 days a week. So sometimes they say it's more like 997, but putting that aside for a second. Personally, if you're in fintech, or if anyone is doing business in fintech, basically 996 applies. That's my personal view. And we can come back to why I think so. But in short, if you're in fintech, it's a hustle. If you're in fintech, you're fighting against incumbents. You're fighting against things that inherently are in your way. That's really why fintech even exists as a phenomenon. That's my personal view.
Thank you. Up next, we have Michael.
Hi, thank you for having me. Solowin, I'm Marco Lim, managing partner of My Capital. Very similar to Gary, I don't work in the legal side, but previously 15 years I work in traditional finance, in Goldman Sachs and also Credit Suisse as well. I'm doing FX trading. And in 2019, when actually founded this company together with my two other founders in My Capital, we focus on managing crypto hedge funds with the licensing. I guess in 2019 was the difficulty is the regulator wasn't really embracing the whole crypto regulatory. It's not until last year they made a 180 degrees turn in actually having all the regulatory framework ready for it. But I think back then in 2019, they were not really welcoming crypto hedge funds to actually have opening shops in Hong Kong. So it took a while for the regulator to understand. For the fintech space, I think there's two areas I think people misunderstood, and I think it's a growing area that people look at, and echoing where Poseidon said about the unbanking in Philippines. GameFi is actually one of the big areas which I tend to look at or I'm interested in. If you guys heard a token called Axie Infinity, it's very popular in the Philippines, and people have been trading it, getting cash, and then able to receive monetary values from Tether, USDD, and able to cash out. So I think GameFi is a concept that has proven that is something called play to earn. And right now, I think the industry are looking for different, more new ways or innovative ways of rewarding the users, including learn to earn and then move to earn. So you see there's a big project called Stepin as well that is very popular last year. It was, of course, shut down by China, but then it proved the concept that not only you play games to earn, but you can move to earn real money, real token as well, that combined with the NFT side. So I think GameFi, DeFi is a big misunderstood still, but I think most of the traditional finance player, how to integrate that, I think that will be a very big topics that we want to address.
Actually, before we switch this to CG, following what Marco mentioned, I want to add a little bit color on X Infinity, because back in 2018, I got presented by these two young guys in Hash event in Korea. For people who know or may not know, it turns out to be the CEO and CMO of Skynet, which is the mother company at X Infinity. Over the news, there has been a lot of people talking about in the past 3 to 4 years that if you invest in XC Infinity's first round in 2019, 2 years later in Q2 2021, $0.1 token price become 170. So a lot of news, blockchain media, crypto media like to add some very sensational titles such as like VCs missing out for 1,700x return in 2 years. But it's actually not true, because I got presented the term sheet. The lockup period is 3 years. So 36 months later from May 2019 would be May 2022. And the XC's price actually drove down to 5 or below. So I just want to add a little bit of interesting context there. And CG?
Good afternoon. My name is CG. I'm the CEO of CPIC Investment Management in Hong Kong. We are actually quite a traditional financial institution. Probably one of the most traditional of these traditional financial institutions, because our shareholder is one of the largest Chinese insurers, Chinese specific. However, in terms of business, we are actually not that traditional. So we launched the 2 crypto funds last year, and we got our VA license uplift last year as well. And this year we are launching 3 more new crypto funds, including a VC, liquid token fund, a quantitative investment strategy fund as well, etc. So I'm proud to say that we are in a very unique position that can help us bridge the gap between Web3, crypto, and traditional finance. Well, regarding the question about fintech innovations, I think I agree a lot with other panelists have mentioned earlier. And in addition to DeFi, I think tokenization is something I really like. I think it can probably help us solve a lot of problems, issues like high cost that the traditional financial industry is having now. And I would like to mention something else. Not that innovative, but I really like the idea, which is Diguan or microconnect, the revenue-based finance. I like the idea, although it's quite controversial. But I think it has quite a bigger potential as long as it's properly regulated and monitored. It doesn't go wrong as like good ideas like P2P lending as well. Sometimes good ideas can go very wrong too.
Yeah, for that I just want to add on. Yes, CG and Marco, both of them have mentioned that the crypto fund, and I just want to mention that in fact for 2019, I was still with the SFC. I was kind of the VA regulatory framework and all regulations in Hong Kong. I was the architect there. I wrote all the regulations for the SFC for Hong Kong as well. So I just want to mention that in fact Hong Kong is a pioneer in that aspect in preparing how to embrace with the crypto fund. That's why we have the crypto fund regulations and relevant framework starting from 2019. And then you can see that in Hong Kong we also have crypto yen ETF recently. So we are in fact embracing that sector.
Great. Thanks for the comment. And I just want to echo what CG mentioned. I do think that all the best ideas in retrospect were controversial at the first place. If you have a legendary idea, you think you are the only one with that idea, and the entire room of audience all agree with you, it's not a good idea. And so I think you set a very perfect segue for me to switch the microphone to Clara about the first question, which is, with your extensive experience in licensing, compliance, what would be some of the piece of advice you will provide to your crypto startups, fintech startups, on helping them navigate around this complex regulatory environment?
For me, of course, I think for these kind of startups, I assume they don't have, a large, investment in hand. So they have to be very careful about exactly which jurisdiction they really want to start their business, because different jurisdictions have different restrictions and regulations. So I guess the first step is for them to really get familiar with the regulatory regime in that country or the area, the place, so that they won't spend some money and then finally they find out that the regulation in that country in fact has a lot of fundamental conflict with their business model or the business philosophy. That will be a waste of their time and energy. And I see from time to time this happen because for startup, sometimes they also want to save some money at the very beginning. So they just try to go to the area without really spend money on lawyers or consultants, just try. And then I think that is really, really bad for them, because then that will have very bad experience with them. They have bad experience, they have lost money, they have lost, very importantly, is their time and energy.
I totally agree with that, and not only for crypto startup, but also for crypto funds like us. Our previous fund is a double-digit million fund, and we were looking at ADGM, DIFC, Hong Kong, Singapore for getting our license, and we were already in the progress of applying for the CMS license, the top one in Singapore. And I would say our team back then only had 5 people. Like, to apply for that, it not only takes a lot of capital, it's the capital intensiveness is over our entire management fee across 7 years, and also the time. We don't have 2 years time frame to go through that entire process. So I do think that's very good advice. Thank you, Clara. And up next, we have questions for Gary. So for Gary, how does regulatory technology, we call it RegTech, change landscape, and what innovations in RegTech should fintech startups be aware of?
I'll be a bit of a contrarian on this. To be honest, as a lawyer, if I'm in the room and I'm making the decisions about how to shape the business, it's a failing business. Absolutely. RegTech doesn't define business. And sorry to sort of be a contrarian on the question. So I think if we draw a distinction between terminologies, fintech and RegTech, RegTech is basically just tools for businesses to use at some point in time. They don't drive businesses, they don't drive business structures. At most, they may be a catalyst for how businesses may become more efficient. So if we sort of look at sort of structuring a fintech business, the reasons or motivations for businesses to change is not because they have a certain tool. The tool may help them do it more efficiently. So even if we look at things like, favorite topics for eKYC or non-face-to-face account opening or market surveillance tools, none of those things evolved in isolation. They evolved because businesses started doing things differently, and there was a need to actually make certain parts of the food chain a little bit more efficient. So the smart tools, in time, some of them became meaningful products and meaningful businesses in themselves. Smart is a very good example. Basically, it evolved around market data technology. And over time, a lot of the manual spreadsheets became sort of an app in itself. but it started life as a business process that did not need a vendor system. Over time, as the scale of the businesses became bigger, yes, the need for better tools started to emerge. But we contrast it against fintech. Fintech actually, in my mind, is actually the creation or development of ways of doing things that can help a traditional business model find new products or find new ways to earn revenues or to scale up their revenues. Actually, that would probably be the best example. And a lot of the fintechs that we see have necessitated the RegTech that we talk about. And face-to-face account opening is a very good example. How did that come about? Because of the evolving user behaviors around mobile phones, smartphones, and also payment tools. Because and payments is actually one of these areas that in the old days was a very boring part of the whole banking universe. But now that has become the most exciting part, because as it turns out, payments actually has the lowest bar in terms of KYC and AML. You can actually run de minimis financial transactions and de minimis account opening through the payment space that are far less friction than opening a bank account or opening a securities account. So these will be the sorts of things that I'll use as examples to sort of draw the distinction between RegTech and fintech.
Great, that's a great answer. Up next, I'm going to navigate this more crypto-specific question to your market about what challenges and opportunities do you foresee traditional financial services to integrate blockchain technology?
I think there's a few things that previously CG mentioned it as well. One of the big areas, I think, in Hong Kong, which we are pushing as well, and globally, which is in the hype this year, nobody talked about it, was RWA STO tokenizations. Just want to open the doors and just say, the regulators here is now fully trying to integrate this into traditional finance. A lot of the guys have questions, why do STO RWA, right? I mean, why put it on blockchain itself? I think CG name a few, which is make it more easier, speedier. But I think the way is when we look at it, of course, interest rate now is at 5% and above, and when people look at their stablecoin and their yield from the bank is relatively low. So people have been seeking for alternative assets. I think one of the way that STO RWA can bring is people who have stable coins right now, they're not earning any yield unless they do margin lending outside. I think alternative way is actually to invest that stable coin into RWA STO. As Joseph Chan earlier mentioned on our FSTB financial service treasury bill, we have actually a stablecoin sandbox in Hong Kong, which I think that is upcoming to integrate with our STO and RWA. And I think financial service industry in Hong Kong should look at the bigger pictures where later on when we have stablecoin issues, the stablecoin will need to link to some RWA STO. And I think most of the people from foreigner might not have a octopus card, but most of the people in Hong Kong, we have an octopus card, which is a e-payment. Right now, we don't earn any interest on octopus. They have been sitting on their balance sheets, just like that, right? Making a lot of money on the interest rate arising in the treasury. I think how we try to make our consumer benefit is through the STO. So if we own the stablecoin, we can actually invest that stablecoin into STO and RWA, which will increase the money velocity in some way. So I think with the STO and RWA part, the second part which I bring up to, which is a big part, I think for the next 1 to 2 years in Hong Kong will be stablecoin. I attended a few panels recently, which I think even in the Middle East, I visited UAE recently from the central bank. Everybody is trying to stay away, not from US dollar, but they're trying to stay away from SWIFT, trying to stay away from the SWIFT network. As a financial institution, I've been trading, in Interactive OSL, some of the exchange as well, Coinbase in Hong Kong, Coinbase and also some other exchange in Hong Kong. I think the difficulty is, I think most of the financial institutions might advise us, if you want to send margin across, you need to go back to the bank, and then the bank will send your margin. And normally the bank take T+2, you just settle the trade. When I send like 10 million across it, you have dozens of questions. And if we look across stablecoin wide advices, the settlement or crypto settlement is instant, it's T+0. So I think this payment in the fintech area is something that we have underlooked, right? I don't think payment should take T+2 or even longer than that. Payment should be T+0, which is like crypto. So I think this stablecoin payment or cross-border payment thing in the coming future in Hong Kong will be a big pathway for most of the people, including big financial institutions. And I think smaller financial institutions in Hong Kong can take place and actually be part of this ecosystem. And I think if you look at Alipay, Tencent Pay, there's a huge margin and huge margin for cross-border payment.
Thank you, Marco. I think a perfect segue for following your opinion on these STO, RWA, DeFi, stablecoin. I would just like to also hear CG's opinion on like why traditional financial services should or should not adopt the stablecoin we're talking about today, RWA, STO we're talking about today.
Well, I got asked this question quite a lot, but I still like to answer that. When we launched the funds and made the announcement last year, the market was shocked to see the news because we were probably the very first with our background to be actively, involved in the crypto market. And the market was shocked because they haven't seen, a name with our background, coming into the crypto space. But for me, the equation is very simple, actually. First of all, I think there are roughly two types of investors in crypto space. Investors, not speculators. One simply sees the investment opportunities, the huge return potential of this particular asset class. Type two is probably people with a strong conviction and a faith in the ideology of Bitcoin and blockchain. And as an individual investor, I'm personally both. But for an institutional investor, you don't have to be both to participate. You just need to be type one, right? You just need to see the investment opportunity to join the market. And actually, as a manager, it is your fiduciary duty to explore new investment opportunities rather than blindly deny this new asset class, like a lot of famous traditional investors do, right? I think we've seen enough headlines by those investment gurus saying this is meaningless, this is a scam. I think it's not a responsible thing to do, whether for a traditional financial institution or like a new investors. You have to really do some research, dive into the space, understand the technology, and see if there's a real investment opportunities. There's a real a return potential for your investors. And that's exactly what we have done. So our conclusion is very simple and easy. We think that this is a new asset class that has a huge investment potential. So the most direct driving force for a traditional financial institutional investor like us to get involved is very simple. It's just the investment return potential. At the same time, when we study the industry, we think that this industry is going through right now a very critical stage with two important characteristics. Number one is it's trying to expand into the so-called real world, other than the closed up like a geeks circle. It's trying to, I don't like the word real world. Okay, crypto is also part of the real world too, but let's just use that as a reference. Okay, it's trying to expand it into our real life actually, and you see this cycle we see in projects like Deeping is booming too. Right, it's really connecting the real world and using blockchain technology. And number two characteristics is we are putting a lot of things under regulation, right? Under the regulatory framework, which Clara is one of the experts I respect a lot and can help you a lot with that regard too. So as a traditional financial institution, I think that we are at a very good unique position to bridge the two worlds, crypto and the traditional finance, or even the so-called real world. And lastly is when we were trying to launch our funds last year, we did some extensive research of the existing so-called crypto native funds at that time, not including Outliers Fund and My Capital, because our findings of our research was very shocking to me personally. What we found was, at that time, at least, the so-called crypto native funds were really not well managed. I'm not talking about the performance. I'm talking about back office management, middle office management. And we found some of the crypto native funds, they didn't even have middle office or back office. I mean, again, not Outliers Fund and My Capital, okay. That was really shocking to me. And so when we launched our funds, I made an announcement. I said, we want to bring best practices of the traditional fund management industry into the crypto world. By best practices, I'm not only meaning investment, but also risk management, operation, settlement, reporting, auditing, all those functions together. And I'm very proud to say that we can do that now. Our crypto funds can do maybe 70 to 80% of what we could do with the traditional funds. Not because we are not trying enough to reach 100%, because some of the infrastructure was not there yet. So we hope that the infrastructure around the crypto industry would be there soon so that we can do 100% as well as we are doing our traditional funds like stock and fixed income funds. So I think us, participating in this, crypto fund industry can be really helpful, to this industry along and bridging the gap as well. So.
Totally agree. Like 9 years ago when we came out fresh from MIT, really, I think none of our 20 LPs and not even myself have taken a class in finance. So really, I do think if I were to judge ourselves, I would admit the weakness is not in scientific research, it's not in investment, it's not in portfolio management and exit. Those are the parts that we are very confident. But the back office operation, to pick who are the asset management tools we should work with, exchange, wallet, custodian, banks. Those are the parts that we actively need help. And luckily, Brock, Chris, and I, we partnered up together. Chris mentioned about the Outliers Fund board, a DNA fund. The main reason why we partner up together is to strengthen all of our back office operation. And so, in this past 2 weeks, Chris and I have been on call with all the big four, all of their auditing experts, and we identified 5 individual partners who are expert in auditing. There's 2 in KPMG, 1 in EY, 1 in Deloitte, and 1 in PwC. And we reach out all the way to them. And so I totally agree. Also, I think that the type 2 investor, as CG mentioned, that have strong conviction. Later on, up next, the next session by Brock, you will see one. The people who have strong conviction, although some of them are very extreme, calling themselves decentralized maxi. I don't know whether Brock should be one or not. But those people who are type 2 mentality, I think in the long run will definitely yield very good return, or at least not bad. But people who are in here just for like financial return, seizing the window. It's not vice versa. It doesn't mean that you can make a change or push the boundary of science technology in this space. And I do have a lot, but I can go on and on. I'll find CG to chat later on. Up next, we have a question for Clara, which is how can regulatory bodies in Asia harmonize their approach to fintech regulation and facilitate cross-border collaboration and innovation?
Yeah, for financial regulators, in fact, we have kind of like an organization called IOSCO, and then for financial the major, not just the major, and in fact, a lot of financial regulators worldwide, they have these kind of IOSCO meetings from time to time, and then they also have a lot of subcommittees to discuss different topics, and then virtual asset is definitely one of them. So through those meetings, they will try to know each other's regulatory framework, and then for them to harmonize all these regulations. Of course, the easiest or the first step they would do is try to align the legal definition of some very important concepts. For example, like the legal definition of virtual assets. So you can find that in Hong Kong, the legal definition of virtual assets is found in AMLO, Anti-Money Laundering Ordinance in Hong Kong. And then you can see that our legal definition is not totally the same, but extremely similar to that in Singapore. So for these, then at least you have some basis for, further harmonize the regulatory framework. But at the same time, I have to say that, we have to take into account different countries, their own system, so they have their own their own difficulties in implementing something, and sometimes countries are also competing with each other. So sometimes it's not why they can't harmonize. Oh, is it they don't know, or sometimes it's they don't want to do it. You are strict. That's good. We are loose. Come, investor, come to my country. We like those, investments. So you know what I mean.
Nice. I also like to get Gary's take on these cross-border innovation and collaboration, especially from your legal perspective.
I think what Clara mentioned at the end probably resounds the most for a lot of people in crypto in the last 5 years. On the one hand, it's sort of people looking for opportunities. Which market potentially is has the most favorable operating or regulatory conditions? But on the other hand, also I think for crypto, and I think you touched on that point, and I think CG also touched on that point. We're also looking for infrastructure, right? It's very fine to say you're going to look for the lowest common denominator and say you're going to set up a $2 shop. But if it doesn't have the right infrastructure, you can't reach your audience. So I think I absolutely appreciate what Clara mentioned about on the one hand, there is sort of a common interest in harmonizing things. But at the same time, we are also talking about some very unique circumstances. For example, in Hong Kong, changing a law to allow for crypto was no easy feat. In Australia, it's been talked about for the last 5 years, it still hasn't happened. In the US, well, let's not touch that. So that, I think that would just be a very good example.
Nice. Okay, the next question for Marco is, how can traditional financial institutions collaborate with these crypto startups, blockchain startups, to leverage their strengths and remain competitive in this rapid growing industry?
I think, one of it is, definitely if you're an EC fund, is we're looking into this Web3 space, into investing into these Web3 startups. But a lot of these Web3 startups, as Gary or CG have mentioned, some of the pain point for us in the industry, which the startup trying to help is to solve fundamental custodians, risk management systems, etc. So I think how as traditional finance can bridge with them is actually provide, look at the surface and see how to enhance the service that the existing offer the clients, like trading, risk management system, fundament as well. So I do echo for CG points is that when we started the hedge fund, same thing, right? It's very difficult to find a crypto or fintech friendly kind of funding. Right? It took me a year just to find it, and I think risk management system very similar. We have to build our own in-house because nobody can take a crypto valuations at the same time while we are trading some ETF traditional finance instruments. So I think this new asset class, we need to have a new system. So for the fintech startup who offer this service, I think it's best for the TradFi people to actually integrate with them to how to enhance the servicing on covering hedge fund like us, CG and such.
If I could just throw in one more analogy. Many years ago, I was talking to a consortium that was looking to acquire Qantas. So for Australians, that's the Australian flag carrier airline. And very interesting conversation at the time, this is about 15 years ago, was what makes, for example, budget airlines successful? And the answer was if it's backed by a flag carrier airline. And I think in crypto and in finance, that is still the problem we're talking about. To have big infrastructure, you are talking about the incumbents. And the incumbents, basically the laws and regulations are built around the incumbents. So that's what the fintechs are actually up against, just like budget airlines. Anyway.
Nice. The last question, we have 1 minute left, is for CG. And just want to know, like, what is some of the most innovative innovations in the space that you think will dramatically shape our future?
Yeah, like STO or RWA or, well, I think as well as other, innovative fintech innovations we have seen, the barriers are pretty much the same, I think. It's all about adoption. It's all about, going mainstream. And that is exactly what we want to do, help that, to promote those innovative solutions. For example, STO, RWA, those things can really help, the economy as a whole, but also, particularly those underprivileged players in the entire economy, like SMEs. I think those are really that the fintech should, keep in mind when they are innovating. I mean, innovation is good, but we are not doing like innovation for the sake of innovations, right? We are helping the world to solve a lot of problems we are faced, particularly those people or those players in the economy that are underprivileged. So I think when we do startups or when we do investments, we have to keep this in mind. This, the average people, the small and middle-sized companies, those players that we should keep in mind when we do, innovative, like a technology development advancement. Yeah.
Thank you, CG. Thank you, Marco. Thank you, Gary. Thank you, Carol. I think it's time for our conference. I hope everyone have a productive takeaways today. If you have more questions, just prep them. Thank you.
Thank you.
Thank you very much, Poseidon. All right. Our next guest is Brock Pierce. Brock is one of the most significant figures in the evolution of the cryptocurrency space. He has a long history here in Hong Kong, which many of you may not know. And he's been instrumental in launching some of the largest projects in the Web3 and the cryptocurrency space. Brock is a futurist. He has the ability to see where things are going in the market. And he's been doing that since he was 16 years old. He started working as an actor when he was 3. And he grew up starring in really major films in the United States. I don't know if you had them here in China, but
Brock was a movie star in America, and he had starred in many famous movies like The Mighty Ducks and First Kid, and these are movies that made their way here. But everything that he's done has been around a career of disrupting technology. He's started more companies than we can mention in a short introduction, but some of the most notable companies or projects that he started have been Tether. I don't know if anybody has used Tether on a cryptocurrency exchange before. I know there's one gentleman there that's probably used it before. Has started Blockchain Capital, a number of other really innovative products. He is the chairman of the Bitcoin Foundation, and he is one of the co-founders with myself and two other partners at DNA. And we are happy and excited to have Brock as a partner. He ran for president of the United States in the last election cycle. So not many people get to do that, but he did that to learn about politics and to learn about what it would take to influence the politicians in the United States about progressing the cryptocurrency movement. And he was successful at doing that. He taught himself a lot about that. We've been friends for around 20 years. I always like to tell the story that I can always keep track how long I've known Brock, how long I've been married to my wife, because we were met around the same time, and I can never forget how long I've been married to my wife. So he's always been inspiring and is always up for amazing conversations with some of the most incredible minds in the world. And it doesn't matter what the subject is. It can be cryptocurrency or art or politics or space travel or health or biotech or how things are being shipped around the world. I mean, you name it, Brock has an opinion and has a conversation that he can have with you in a very intelligent manner with anybody that knows the subject matter. So I'm glad that you all get to hear Brock speak. He's an amazing speaker and one of the owners of some of the most amazing hats in the world. So here's Brock.
Well, thank you, Chris, and good afternoon, Hong Kong. It's been a minute since I've been here, and I think, as Chris said, I'm generally up for everything. And so, yes, I'm a man of many hats, but here to talk to you, I think, generally about what's going on in the trends of cryptocurrency, with this technology and how it's impacting the world in which we live. Cassandra, I think you were driving, and so if you'd like to begin. Yeah, it's good to be back here, and it's good to be here with the tremendous progress being made. It's been a long adventure. I got my start here in Hong Kong in 2002 is when I set up my business here. This goes back after my days of acting. I quit acting when I was 16 years old to start my first business. This is in the Internet 1.0 era, as we're talking about Web 3 now. But in Web 1, I was the youngest entrepreneur to raise capital, which I think means I'll forever be the youngest, at least during that era. And at 16, raised $88 million from Microsoft and Intel and Chase, Lazard, NBC, David Geffen, Terry Swimmel to build the first, Enron actually gave us $5 million too. But to build the first streaming media company, the first streaming video company. We were like the precursor to YouTube, Netflix, and Hulu. And I learned a lot, in that, call it period of my business school about market timing. We relied on broadband penetration rolling out at the rate that the analysts had forecast at the time. And so we did not have the same outcome as Mark Cuban. You know, he was doing broadcast.com, which did not require broadband. I don't know how many of you remember what it was like using a 56K modem. But to stream video would be pretty granular at the size of a quarter. You needed to allow a meaningful amount of time in place. So if we want to jump into what brought me to Hong Kong was not that, but I grew up as a gamer. And I was a byproduct of the first generation of kids with computers. And when computers became, games became networked, we got what we call metaverses today, or what we call massively multiplayer online games then. And those took off primarily in Asia. Remember, the United States, where I'm from, was really a console market primarily. It was, you know, Japan's, Nintendo's and Sega's and Sony PlayStations, where the business model was a packaged software business. You know, the business was you'd buy a game for $60 and get whatever gameplay. But due to piracy here in the East, you know, and other developing nations at the time, that business model didn't work, and you had a lot of gaming activity primarily through the PC. And it was South Korea that really, you know, pioneered the model of changing the business from packaged software to software as a service. And because you couldn't stop people from pirating the software, you had to basically create a gate, which was the multiplayer functionality, that you had to access a central server and you had to pay for that access, which is how you were able to monetize the great propensity to game in Asia. And so that's how the SaaS model emerged. And as you created these persistent worlds, these virtual worlds, where you'd have your avatar, you know, in this environment, and the things that you accomplished in that space were persistent, meaning when you logged out, like in the Matrix, and you popped back in, you know, your character was as you left it, including all of the digital assets that you had. And because those things were alienable, meaning you could transfer them from one, you know, from your account to another account, it's human nature that eventually someone would allow external factors, such as, you know, money in your bank account, to allow you to buy greater privilege or access. Because human behavior doesn't change from the analog to the digital world. Actually, in some ways, we become more of our, you know, our human behavior might be at its worst because of anonymity. Obviously, we're more polite when we're in person with people, and our reputation is there. When you've got the anonymity of the internet in place, you know, some of the worst behavior emerges. But anyway, I was one of the first people in the world to recognize how these intangible assets inside of these massively multiplayer games, you know, had value, and I became the first major market maker in the world, along with my old partner, Jonathan Yantis, to do this. We were the top 2 players in the Western world, and I ended up moving here because I needed a really big supply chain. It turned out that this was a very big business, and there was no way that I, or even a team of people that I would train, could mine enough World of Warcraft gold or EverQuest gold or, you know, game currencies on my own. And so I needed to find a region in the world where I could teach an entire population of people how to make money living in the virtual world. And so I was looking at places where people were selling me currencies, and I wanted to figure out where I thought the greatest potential was. So I was looking at Eastern Europe, I was looking at India, but China stood out as the best place where I thought I'd have the greatest success. And so I had never been to Hong Kong before. I'd never been to China before, but I made the decision to relocate my business here in 2002, originally in Kowloon Bay, so I was here for SARS and all that. And I'm going to play a little trailer for you, because this is, for those that are interested in cryptocurrency, there is the origin stories, of where did this come from? And my origin story in this industry was the thing that drove, I'd say, really the first major wave of significant adoption, right? It's the people that were living in these virtual worlds, buying and selling these digital currencies, a lot of which was here in Asia, were the ones that had the shortest leap. It was easiest for them to see and understand how this digital, this Bitcoin could have value. And so this was a movie made called Play Money, which you can find on Amazon and other things for those that want to watch a documentary on this industry. It's interesting how on the film cover, I'm the wizard. But if you want to go ahead, Cassandra, before there was Bitcoin, there was Play Money. And this is a story of China and Hong Kong.
I struggled for years trying to explain what it was I was doing.
Usually I just say I work with video games, because if I say, I'm a virtual currency broker, people just kind of look at you like, what?
You've got games that are based entirely on selling gold on Facebook. Virtual worlds are creating demands, and somebody's going to have to meet those demands. They don't. Somebody like me will.
It was at that time that I realized that people will spend money on virtual things no differently than they would for tangible things. That was kind of that eureka moment for me. And that's really when my company was on its way to doing $100 million in revenue.
And they said, so what you got to do, you got to take all the profit we made, and you got to give it to us, or we're going to sue you tomorrow. This is going to end badly. Oh.
There are a lot of people.
Business versus family. I didn't do it.
This is the future of the world.
And this is happening on a massive scale in countries like China. The real and virtual starts to blend together.
But I always looked at this as something that could go poof instantly.
Well, it didn't go poof. The industry changed the entire video game industry, much in the same way as a teenager. I started the first streaming media company, the first streaming video company, which has largely transformed the entertainment business. This, and what we did in making markets for in-game assets, changed the entire video game industry. It went from packaged software to software as a service to free-to-play and microtransaction-based gaming. Then from there, unfortunately, just due to the economic incentives and drivers, there was a lot of harm that kind of happened to the game industry because it became pay to win. The game companies, to maximize profits, really started to, I think, undermine the game industry itself, but that's ultimately being corrected with where we are now in play to earn. And so for those of us that were in this space, the game space, the question was, were these same ideas of what we're doing in the digital world, could that be brought into the analog world? And my company alone, we had hundreds of thousands of people in China playing games professionally to mine digital currency. I was PayPal's largest customer for years. I was instrumental in launching Alipay. I formed the first media partnership in China with Shanghai Media Group, or SMG, in 2004 and 5 to create a television channel called Games TV to bring esports into China. And so I got very good at payment systems and dealing with cross-border transactions. And I'd say inevitable that I would end up in the business that we're here to talk about. And so I've done more things in the current industry than we have time to cover in this session. But a couple of the things that I think are notable and worth referencing are things like Mastercoin. Mastercoin was one of the 3 layer 2s built on top of Bitcoin. The idea that Bitcoin could be used to do more than just be a store of value, that we can build applications on top of it, like the HTTP layer effectively, where Bitcoin becomes a Web3 sort of internet. You had colored coins and Counterparty and Mastercoin, but we were the first ones to tokenize this activity. And we launched the first ICO, or a token sale. Started Blockchain Capital, which was the first venture fund in the space, one of the most successful venture firms of all time that funded the Coinbases, the BitGos, the Krakens, and most of the early companies in the space. I stepped down after raising the 3rd fund, but Blockchain Capital has gone on. It's on Fund 6, one of the preeminent venture firms in the space. I got sent in by the industry to disrupt the Bitcoin Foundation, which was the first organization, the first legal entity really created to assist in government conversations, which you call advocacy, lobbying, and dealing with the media, because Bitcoin is a decentralized thing that has no one that owns or runs it. For those that used to read about it, Bitcoin had a very questionable reputation because the media just sensationalized the worst aspects of innovation, because that's generally what gets readers. And but who does the media reach out to? And so this organization was set up for that. I co-founded and started Tether, which was USDT, the first stable coin. I started the first crypto bank also in 2014 that banked Tether, and we can keep going. A lot of other things helped my friends out in Israel with Bankcore. Bankcore was the first liquidity pool, the first DeFi platform. And actually, interesting enough, for those that are here in Hong Kong, I hope some of you are familiar with Block One and EOS, because that was a Hong Kong company. Brendan Bloomer was in the business of selling game characters in World of Warcraft and these things. And so I started working with him when he was 16. And when he turned 18, I told him to skip, going to Stanford and instead sell me his business and move to Hong Kong and run my account sales business, which he did, which is why Block One ended up running from here, for those of you that know Michael Alexander and a bunch of the folks here in Hong Kong. But we started Block One, and there's many, many, many more things. But I think the point of what brings me here today is the Sequire business and the fact that we've helped organize this event in partnership, and so grateful to Solowin and the team at DNA and Sequire for bringing me out here. It's been since before COVID, since I've been to Hong Kong. And it's worth perhaps mentioning, after having started so many of these things, and the next big thing from my perspective that was needed is, where the old and the new, where the legacy financial system and the future financial system meet, right? How do we build bridges, between our nations, but between the public and private sectors? It's human nature to fear that which we don't understand. That is our nature. And the way that we overcome or conquer fear is with knowledge and information. And so I got very involved in educating governments in 2013, 14, and 15. I was also probably the first person educating banks and exchanges, because my background prior to Bitcoin, my main investor was Goldman Sachs Principal Strategies. I've filed S1s to go public and had relationships with most major venture firms and many financial institutions. But by 2015, I felt there were plenty of people doing that. It wasn't until I was running for president of the United States and going around state by state and talking to local legislators that I realized that there was still a huge vacuum of education not happening. Most legislators I met had no idea what this was. And they'd take me aside to try and have a private conversation where they would admit how little they knew, but they're curious and they'd love to know more. And so, I got very involved again about 5 years ago in educating government. And so I've continued to do that. I've taken a role in a permanent mission in the United Nations, taking on another now, which covers every country in Central and South America. And so I led the first formal delegation into El Salvador to help President Bukele with the implementation of their Bitcoin law. And so I do a lot of this work and set up our own organization, which is unicorn.org, which is the United Council of Rising Nations. And the idea is that humanity, civilization, right, is facing existential threats like never before, but we're also living in the most prosperous time. Never has the world been better than it is today. And most importantly, despite the challenges we face, we have incredible tools to overcome any challenge we face right now. Right? It's what a time to be alive. And I think innovation is the answer, to call it the growing pains. Some of the damage we've done as we, as a civilization, have been, growing. In our youth, we sometimes make messes, and we still do some of that today, but we have the great pleasure of being able to fix, the things that we've done and without judgment, because innovation is the tool. And so the whole idea is that every startup wants to be a unicorn. Governments can be unicorns too, right? By saying yes to the future and tapping into innovation as a tool for positive transformation. At a macro level, we could also talk about things that are going on with AI right now, but we're in this sort of fourth industrial revolution where technology, the internet, and the internet of information has clearly been democratizing information and has impacted every single business. Blockchains and the ability of building, a new database architecture combined with now artificial intelligence, the world is changing rapidly. And that's kind of indisputable. I think the thing that might be helpful for you just to understand the macro of why, what this shift is, it's, Web 1 was this idealistic, sort of concept of democratization of information, or the internet of information. And what happened with Web 2 is the biggest companies kind of, got their advantages and, have dominated their respective markets. And what we're seeing with these distributed databases is an alternative market is emerging. So if you think about what was the most precious commodity in the world for a long time, it was gold for thousands of years. Then it became black gold or oil. Right now, the most precious commodity in the world is your data. It's your activity on your phone and on the internet. It's your digital DNA. That's the most precious commodity in the world right now. And other than getting access to products and services, you're usually not benefiting financially. There's this concept that we talk about right now, universal basic income. Right? If people people that are using the internet, using your phones, those that are active, if they started to participate in the remuneration or the value creation from their activity or their actions, everybody in the world might be able to make $1 a day. And this may ultimately be the answer to solving the world's poverty issues, right? And solving a lot of things. And so that's at its core what I'd say, Web3 is. It's rather than Web2 businesses or big tech owning the network and all of its value, to the users becoming the network and participating, not just in terms of access, but financially from the value that's being created. And that's a very powerful thing. It's an unstoppable thing, right? It will eventually get there as we're finally reaching a point where the scalability of the technology is getting there, the user interfaces and the security is getting there. We're now looking at these things not just being ideas and prototypes, but functional sort of products, which I'm very excited by. But to bring us really to the sort of present, what's happening right now, and why is today so different than 10 years ago? Well, first of all, like the US political system, we run on 4-year cycles, so does Bitcoin. And so we just had another event, a halving, where the number of new Bitcoin produced every day, the inflation every day, reduces by half. And these, if you study the cycles, are usually when we see the big rise in Bitcoin price, which we did, in anticipation of the halving, but something else really changed, which is the ETFs, right? Bitcoin went from being what we would call the Wild West, which Wild West was California. So obviously a very valuable West, but a wild one, where there's risk. And I'd say that risk is probably largely gone now. I would argue that it's not so wild anymore. I'd say it's institutional. And the largest investors, are organizations like BlackRock, Fidelity, Franklin Templeton. Now that you have Bitcoin ETFs in place, the question that a lot of people would have if they were the contrarians playing devil's advocate with me, would be, well, but what's the US going to do? Isn't this a problem for the dollar? What did Trump say in 2016 and 19? And, what makes you so confident that, the government's not just going to come in and shut this down? I make those arguments, but I don't think that's a conversation anyone's even willing to have anymore. I take that back. I was arguing in Congress the other day with Congressman Brad Sherman, who's probably the most anti-Bitcoin member of the US legislature we have. And so I was debating him in Congress 2 weeks ago. But I'd say that very few people would be willing to make those arguments right now. Because when the Securities Exchange, when the SEC approved these Bitcoin ETFs, they basically said yes to retail investors, being able to access Bitcoin as an asset class. I think it's going to be very unlikely that the US is going to reverse that position. And, it's worth what we're here also commending Hong Kong's leadership and what we're seeing in the UK. I think the wild component of this is gone. And so that's the biggest risk factor that I'd say people were concerned about, because investors, uncertainty is the biggest thing that investors, are worried about. And regulatory uncertainty is a pretty big overhang. And just to give you an update on what's going on right now, take a look at this political shift. 52 million Americans have digital assets, but this is a week ago, they're talking about the Biden administration, the president of the United States, taking a more and more crypto-friendly position to woo, potential voters. Then you've got in this election cycle an independent running for office, an RFK or Bobby Kennedy has clearly been running around to crypto conferences and making clear that he's, pro-crypto. But even Donald Trump, who had spoken, who had taken a negative position, has come out, and this is Donald Trump in the last week. I'm very positive and open-minded to cryptocurrency companies and all things related to this and the burgeoning industry. Our country must be the leader in the field. This is a pretty big change. The fact that all three candidates for president of the United States are competing to show that they are the most crypto-friendly, and they keep one-upping each other. So the combination of ETFs, the combination of people running for office, competing to be the most pro-Bitcoin or crypto-friendly is a major shift that I think is important for any investor right now. I'd say if you've been on the sidelines, this is the moment where you probably should really be taking the time to become informed and educate yourself. Right? You don't need to be first. Actually, the second mouse usually gets the cheese. Being first is often a very dangerous and high risk approach that I wouldn't advise, except for people like me to do that sort of work. But you don't want to be last. Is the other thing, right? Fortune favors the bold, and what you want to do is be paying attention and accessing information so that you're well informed, that you don't want to be first, but you want to be early enough that you're reaping the rewards of taking hopefully a largely de-risk bet, but an earlier bet than some. It's great to see what's going on here in Hong Kong. I had set up a lot of my early crypto businesses in Singapore in 2013 and 14, and it looked like for a while that the MAS and the Singaporean government was going to be the leader in Asia, and clearly they went from being in first place to no longer holding it. Hong Kong right now is, from a leadership perspective, as bridges are being built. Hong Kong as a government and a policy perspective and a licensing and regulatory framework has taken, an early now leadership position, which I think, can drive a lot of positive economic development here, right? As people like me and businesses like mine think about where do we want to be incorporated, where do we want to set up those asset management businesses, where do we want, to be headquartered in the region. I'd say Hong Kong is looking very compelling right now, and I would have gotten the bet wrong had you asked me 5 years ago. And that's back to like a lot of these things, and it's a wonderful thing to see. And so I'm excited to be here, and I hope that fortune again favors the bold, and when policy makers make smart bets, that the private sector shows up with the economic development and investment to support that the companies, if you build it, they will come, actually do set up and work with the local policymakers to make sure that those policies are delivering, the intended, economic results in a good way. It's tokenization. This affects everything in the same way that the internet has. We've talked a little bit about, I think GameFi has been mentioned, today, and how it's, call it play to earn, which is effectively what I was doing over 20 years ago. If you spent time in a game and you were doing well, you were collecting digital currency, you were able to monetize that. It was really a time economy. You're buying and selling time. For those people that had expendable income, but lacked, an extra 8 hours to play the game, you'd use that money to give yourself, the advantage so that you could work. And for those that were probably in the game too much, there was a way to monetize some of that energy to pay rent or go get a beer. But so we're seeing this in gaming. We're seeing this in TradeFi. One of the things that I don't know if you're following it, but for anybody that's in global trade, Tether is one of the main use cases right now is in trade finance. Because we talk about settlement times, the idea that you've got 24-hour, 365-day a year instant settlement, if time is money and money never sleeps, the banking system just doesn't settle as quickly, and that's missed opportunity. And we're seeing, double-digit $1 billion a day of TradeFi, is happening. I mean, Tether right now has got over $50 trillion a year in transactional volume. Probably breaks 100 trillion soon. And this stuff's getting, fairly substantial. NFTs or non-fungible tokens. I'm not a fan of this acronym, though. We bought NFT.com, and the first 2 NFT projects were, platforms were created in my living room by 2 sets of my partners as well. But this is cool for any art collector. Again, as we watch through each of these waves, the first wave of something is normally immature. It's normally not polished or refined. And so, you watch these cycles where, okay, there's this thing called NFTs, and then they come crashing down. That was the internet, by the way, in 1999, and the bubble bursting in the spring of 2000. The bear market, in the internet in 2002 was worse than any bear market I've seen in any industry in my life. I was an entrepreneur back then, and if you had an internet startup in 2002 and you wanted to try and raise money for it, you could not get a meeting with any investor and any firm anywhere in the world. At the time, if you were a venture capitalist and you took a meeting with an internet company, you would be fired for talking to them. That's how bad the market was, because the bubble of the dot-com boom and that pendulum swing in market correction was so harsh that the internet was effectively dead from an investor perspective, even though all the fundamental metrics of usage were up and to the right. I was a managing director for a little while at a firm called Clearstone, which was Idealab Capital. They were the first venture firm, financing internet companies, and they were the lead investor in PayPal. They put $5 million into PayPal at $10 million pre. And PayPal was the fastest growing internet company ever at the time. And there was no investor on earth that would consider funding them. They were the fastest growing internet company ever, and there was no one willing to put a buck into this thing, which is why they merged with X.com to acquire Elon Musk's cash off his balance sheet. That was how that deal actually happened. And funny enough, X.com is back again. Actually, Block One took $4.3 billion in its token sale, making it the most well-funded startup in the history of the world until last week. X.com created Grok, which is Elon's AI project, which did a $6 billion seed round. A $6 billion seed round at an $18 billion pre, $24 billion post. Definitely exciting times. There's so much stuff. Politico-fi is interesting. We're talking about meme coins, but real world assets, as we just think about the size of markets, real estate, our land titling, right? Systems of title, our pink slips in our cars, everything eventually gets tokenized. And with that, the option of fractionalization, it's just upgrading the infrastructure of how our markets currently function, so that they're operating all the time with faster settlement, greater security, less intermediaries, and with that greater efficiency. We're going to continue to see this. Just to put the numbers broadly into perspective, everything we've seen to date, I'd say, was the small phase. Right? Everything up until this year was the pregame. Until these ETFs and effectively the regulatory uncertainty of, what is government going to do, up until that answer, this was all the pregame. The fact that you're seeing what's happening in the presidential elections in the US, you're now seeing not Gibraltar and, these small countries with regulatory frameworks, but the most important financial markets and hubs in the world, having greenlit this. it means this is going all the way. And what that means is we're talking about a $3 trillion market today, which is nothing to sneeze at. There's been some substantial value created, but relative to where it goes from here, this was, the small part. Just global equities is a $122 trillion market, real estate at 280. We're talking about a $quadrillion market, that this is ultimately going to impact. And as any investor, liquidity unlocks value, right? There's a lot of markets that lack liquidity, and those assets are valued less as a result of those, that lack of liquidity. A technology that is driving accessibility and driving liquidity and driving efficiency should ultimately unlock value in many of these asset classes. And so, you're watching sort of a changing of the guard. If we're right about Web3, you may watch a lot of these leading businesses, dethroned as a result of a new framework and a new model. And it's not easy, for a Web2 business to become a leader in Web3. Telegram, I'd say, is an example of one looking very good right now, and Tom. But it's very difficult because it requires changing, kind of your DNA as an organization, right? It's hard. Think about the brokerage business, and how do you cannibalize yourself? To evolve, to go through that metamorphosis, right, from a caterpillar to a butterfly. It's a difficult thing, the process of liquefying in the chrysalis. It's painful as a business, and it requires really good leaders, a great CEO that has the vision to know how to actually make that leap. But some will, some won't. But with that incredible investment opportunities, emerging, if we want to try and look at, some of these markets, and their size, I'm here and Chris is around. You got a chance to hear a little bit from Poseidon in his moderating. But yeah, for those that are interested in what we do on the asset management side, feel free to, engage with us. But a lot of, big opportunities here. I think that I don't need to go through all of it, but I'm going to make sure that I've also left some time to answer questions. How are we doing on time? Okay. I don't think we need to go. I think I've covered that, the top financial institutions of the world are all participating. This is, I think, worth stopping and pointing out. The ETFs, the estimate was that the ETFs would see $35 billion of capital flow into Bitcoin over the course of 3 years. That's what the analyst predictions were. 35 billion over 3 years. Over 50 billion in the first 6 months is what we've seen so far as these systems are just coming online. As accessibility, improved by allowing, financial institutions that might otherwise be prohibited, in buying into this new asset class, right? Because it doesn't fit into the mandates. This is driving massive accessibility and making it easy for retail too. The other thing, as I said, is it's driving earlier liquidity. When you're funding Web3 startups, as a venture capitalist, we're usually, looking at 7 years, as when we invest, we might see liquidity. In this Web3 world, you're investing and often seeing liquidity depending upon, the market conditions. The market cycles move a lot faster, but you're looking at liquidity in a matter of, 12 to 24 months, which, from an investor perspective, makes investing here far more compelling than in a Web 2 business or approach, which the last panel, I think, covered. And so I think let's take a moment to be able to answer some questions. I don't want to take this entire time up to talk. So I guess I want to start with some questions so I can try to at least provide some information specific to what you want to know.
Thank you, Rod. That was super interesting. I have a question for you. When is the moment when you realize, people who are extremely skeptical of a lot of this industry and a lot of what you say, what is the moment when, they finally get it and they're like, wow, I should have realized this all along? When do you find, they cross the chasm, or that moment when they go, oh, wow, the fallout? Thank you.
Well, I mean, I guess that depends on each person. Some are faster than others. But then the collective, sort of portion of this is, when, as Malcolm Gladwell would talk about, when we reach that tipping point. And I think we're at that tipping point now. And I think the interest, was not the issue. I think it's really the government stance, right? Because that's where, any intelligent, sort of person, that would be the last thing where you're like, well, but what's government going to do, right? I think I covered that well enough here where that should be the last thing that would be providing a healthy amount of skepticism or reluctance, right? That would be the main thing that would hold me back if I didn't know what I know. And I think that's kind of like back to green light. It was a red light industry to most people, for the first 10 years, and it's been kind of orange. It took a certain level of risk tolerance for people to be a participant in this industry, call it up to last year. Right now I'd say it's green light, it's go time. There shouldn't be anything of any significance holding you back from taking the time to learn. At least making sure you understand what's going on here. So it depends on each person. Some people are always going to be last to the party. And some, are pioneers, they're explorers, and they don't mind, the hard work of, being early. But, the main thing I think I would point out is it's, the water's warm. It's a good time to be checking it out.
Brock, fantastic presentation again. You mentioned the NFTs. You didn't like the name NFTs. I guess it's the fungible part. Is that? But you didn't like the name of it. But you did point out that they were initially used for art. Sorry. What do you see as the rejuvenation of the interest in NFTs? So they certainly went up, and then there's been a somewhat of a decline in the interest. What's the next stage?
Well, I think the art application, is still a great one. Our art and our culture is such a critical component of society. It's a critical component, and so many creators have never been able to make money off of their art because their art form was digital. Remember, one of the main things a blockchain did is it allowed digital scarcity. The internet of information, the internet as you've known it, allowed for piracy, right? And for that reason, people were not willing to ascribe value to digital art products. They weren't willing to spend material money on it. And what a blockchain did is it allowed for a digital certificate of authenticity to be attached to that piece of art, that creative product. And now people are willing to ascribe value to it, and it's a tens of billions of dollar market. So artists around the world that make digital things are now for the first time able to make this their full-time pursuit, right? If you were a digital artist, you had to go work at a Disney or a video game company, or to go work at Marvel. If you're a great digital artist, you can make this your full-time pursuit. And so that's going to unlock a tremendous amount of societal value, right? Without art and culture, we're lost. And so those people that are on the pioneering end of art can now be remunerated, can now live off the art and the work product. So I think that is still one of the things I'm most excited about. But obviously, wave one, people get overexcited often in the beginning, and the quality of the work product is poor, and it became number go up, very speculative. And so naturally, markets go through the process of correcting. And it's still art at the end of the day. It still has to be good art. And where are you going to display it? I also, with my partner Crystal, we created the first NFT art gallery in the world in Puerto Rico. And that was with digital canvases so that you could walk into a space and experience it. I still want art on the wall in my office and in my house. I don't really want to show off my art just as my profile picture of my Bored Ape, for example, or like show off in my OpenSea account and wallet. I want to experience it. And there's, you can do that now in your home. And so it's taken a while for that infrastructure, that hardware, right, those digital canvases to be built there, and the software system specifically so that you can display and really present your collections. And even, in my house, it's automated. Like, depending upon time of day, the collection will change. Depending upon what I'm having over, I can change all the art in my house or at the gallery, for any event. It's actually pretty awesome. And eventually, it's still going to take a few more years for people to have upgraded their homes to really be tapped into, how to present this. So I don't want to understate that one. I think that what's going on in terms of digital art is one of the most exciting use cases of the technology because of not necessarily what it means financially, but what it means culturally.
Right, but the question was actually like beyond art, because there's not everyone in the world is interested in art actually. So the NFT
Back to
functionality.
what it is it's a certificate of authenticity, right?
Yeah.
It's a certificate of title, chain of custody,
Right.
right? And so with a chain of custody or title, right? What are the industries that's going to impact? Well, first of all, it should over time reduce piracy, right? And it should improve on authenticity, right? And which should have an impact on supply chains, right? And knowing that the quality of what you have is what it is, because you're going to be able to track things from source, from commodity coming out of the earth, ultimately down to whatever product you're buying. You're going to be able to trace it back. And so that should have a big impact just on manufacturing, and supply chains. The idea that we're able to trace things and understand where it came from, that's going to unlock value too. People are willing to pay a premium for artisanal things. You'll pay more for a certain milk than you will somewhere else, but you don't really do that if you don't know what that is. And if you can't affirm that this is that great milk that comes from that great farm where they really know how to take care of their cows, right? So these are big shifts in how markets are going to function, because in that knowing, people will pay more, right? They'll pay the premium for those things once you're aware of, once you can confirm what it is. So it's everything. Everything eventually, has that chain of custody where I can see what it is that I'm buying, and therefore I'm going to pay less for poor product, which might be getting a premium today because it gets lost in the shuffle. And the things that are great products will probably get the premiums that they deserve. And then with that, fractional ownership, this is back to things like real estate. One of the things that made the United States of America what it is was our ability to, land titling. And then with that, the financing market, the ability to get mortgages against it. A lot of the world still is lacking in that infrastructure, right? Like in the same way that Africa leapfrogged wired telecommunication and went straight to wireless, a lot of these places that are underdeveloped are going to end up just leapfrogging straight to Web3 solutions, right? They're gonna skip over some of the things that, we did and jump right to the latest and greatest sort of systems, which I think is gonna, create a lot of economic impact, in the developing world, in places like Africa and Latin America, for example, and Southeast Asia. If I were over here, I would be looking at, the developing markets in Asia as some of the most exciting investment opportunities, right? I want to probably be headquartered in a Hong Kong or a Singapore, but anything that needs a database, is going to be impacted in some way. Testing.
Check. Hi, Brock. It's Alvin Fan from OP Investment Management. First of all, I want to thank you for your contribution to my World of Warcraft account back in 1996. I was probably one of your early customers, and the thrill of receiving 1 million gold in Ironforge for the $19.99 that I paid over PayPal was thrilling, to say the least. And yet, here we are. All of us running, respectable business, to say the least. My question, Brock, is really about RWA. Here in Hong Kong, the regulators have kind of tilted their direction and their focus really very much on RWA, and that's just my read. Some might disagree. Every week or every other day, I meet with tokenization specialists, teams who want to help me tokenize my real-world assets, but none of them can really solve the problem of liquidity and bringing together the liquidity providers and the market makers to replicate something that would otherwise represent maybe an AIMS listing board or a small exchange. I just want to ask someone who comes from your background, are there any projects that you've seen that have been able to come close to solving this puzzle?
Yeah, the 0 to 1. How do you get from 0 to 1? And that is, something that a lot of us spend time sort of looking at and trying to understand how that's, what's going to get us there. My view on tokenization of real world assets, if we want to talk about real estate, I think in the beginning, it's, either going to be identifying the highest cap rates in the world, right? Finding markets that have got the greatest yield, and places like Dubai might have a 30% cap rate or a 40% cap rate, and that, by putting those things into a market where, because of accessibility, allowing foreign investment into accessing those very high yields, I think is something that's going to motivate, and drive enough people, into that market to create that liquidity. But it's going to start with the highest yields in places where you feel, your capital is safe. That, or I think it's going to, in real estate, come from trophy, sort of transactions. It's trophies, people chasing trophies, or highest yields, I think, is where it's going to come from, because it's not going to be everything. And I think if you're a project focusing on tokenization of real world assets, I think you need to be mindful of what's going to drive adoption. And it's either going to be best returns or social status. Actually, the same thing in World of Warcraft. People were paying for the greatest utility or social status. You wanted to have that incredible Lamborghini, which might have been a horse, or an exceptional artifact, relic, weapon. And I think that it's likely going to be the same thing here. But also it could be in co-ownership of the greatest Pokemon cards, right? Or your, baseball card, your Mickey Mantles, right? What are those things where I might not be able to afford that $1 million baseball card, but I might want to own $1,000 of it, so that I can talk about the fact that I actually have that thing, because it's what is our passions, right? Or it might be in your great sports cars, right? When Lambo, one of the things I most dislike in our industry's development, but clearly it's a thing, you know, if you're young and aspirational, in your aspirational wealth phase, you know, that is symbolic of success, right? And so maybe people ultimately want to own a fraction of you know, a Lamborghini or you know, a classic Ferrari. You know, I think that there's going to be some stuff in the aspirational area, right? The paying for social status, because you no longer need to own all of something. You can own a fraction of it. You know, those are a couple of, you know, areas where I think we might see, you know, call it that first wave of adoption, because you have to change, you know, you're developing a market for nothing. And so it's not, you know, what are the things that are most likely going to get the level of liquidity necessary to make the promise of this idea real? You know, how do we make this idea into reality? And I think it's most likely going to come from concepts like that I think are applicable to anything, right? The best returns, or, you know, the thing that, you know, people are most passionate about in terms of social status and things. All right, I think I might be done. Well, first of all, again, or last of all, thank you for having me. It's great to be back in Hong Kong. And to the organizers and everybody that did all this incredible work, thank you. I look forward to coming back again.
Thank you, Brock. I told you that was going to be good. So thank you very much, Brock. Appreciate you taking the time to have a conversation with us. And thank you very much to the team at Solowin for including us in your amazing conference. We really appreciate you inviting us. And it's been a pleasure to work with your entire team. So thank you very much for allowing us to partner with you on this journey here. This brings us to the end of our journey, and we appreciate you spending time here with us today. I hope it was informative, and I hope that you learned some things today, and that the speakers were educational for you, and that you leave here today with some more knowledge than you had when you got here. So with that said, I'd like to have Thomas come up and help us close out the event.
Thank you very much, Chris. Thank you all of you for being here today. And I would like to thank Brock and John for your amazing sharings. That was truly amazing. And I would like to thank all the guest speakers, including Marco, Clara, and Joe, and Gordon, and everybody's and Poseidon, everybody's here. Yeah, really thank you all of you to make these things happen. And yeah, and also I would like to announce a very exciting news about Solowin that we announced yesterday, that we would enhance our cooperations, a strategic partnership with iCapital, and on the virtual asset areas. I think that would be truly amazing for us for this journey. Thank you very much for all of you being here today. And I would like to invite all of you to our networking drinks on 5:30 p.m. That is some steps just next to here. That is called Joe, the restaurants. So no worries. So please come to our networking drinks, and if you would like to have more updates about Solowin Holdings, please scan your QR code on your badge. We'll keep you more updates on our news. And one more important thing is that we expect to host all of you next year here. Thank you very much.
Hello. Could I please invite all the speakers on the panels and our keynotes, John and Brock, to come to the stage so that we can make a beautiful memory with an epic photograph. Thank you. Oh, and then also any guests that are still here, we'd love for you to come up on stage as well so that we can really seize this moment, Carpe Diem, together. Thank you. So yes, if everybody could gather along, everybody welcome.